reports before the Fed meeting next month. The 16th, I think. It's the 16th.
You're assuming that you can change mortgage or long-term.
No, I'm not saying that.
I'm sure that these guys have the
maybe they don't. I'm saying
influence anymore.
I'm saying whether they're in cutting mode now.
Right.
The next thing that comes will be we'll get two more. I was wondering, do we get two more inflation readings? Yeah, we do. We get the before the next Fed meeting.
Right.
But in September, you would think they're doing 25. I don't know. Well, they're probably doing 25. That's 70%, isn't it? 50's not, but they're probably doing 25. Unless what could come in the way of that? The inflation number or a really strong jobs report, which is the first the first Friday of September, which was coming. But it is coming, and as we talked yesterday, and we're going to talk to Jack Cafferty too. There's a lot of people assume it's that we're in a tailwind environment right now, not in a headwind, and that makes you nervous.
Always. I'm nervous either way.
You're nervous either way.
Let me tell you what's going on in corporate news this morning. Chinese AI startup DeepSeek reportedly delaying its next generation R2 model after having trouble training it using chips from Chinese tech giant Huawei. This is a pretty interesting story because the Financial Times reporting that DeepSeek ran into problems as it worked to train the R2 model with Huawei's Ascend chips, which had been pushed by the Chinese government, Joe. The article says that led DeepSeek to fall back on NVIDIA chips for training while using Huawei's chips for inference. That refers to an AI model making its own predictions after it learns from a large amount of data. So this goes back to two issues. One is that basically the first version of DeepSeek probably was built on the back of NVIDIA chips the whole time.
Really?
That's the lesson of this whole situation. And if you remember, we had Alex Wong
I defer
on
to
our
you.
podcast.
I defer to you. This you were right on. Which you thought you
talking about?
Not good. The GPT-5 rollout
not as good as I want it to be.
shows strain, and it's slower, and it says something weird here. It's like a colder tone. Criticize the colder. What does that mean? It's not as friendly. Does it not say "I like you, Andrew" or something? Or
the voice is as friendly as ever. I think she's too friendly. I don't like that voice.
How is that possible?
I
love it when people.
The woman who talks to me.
I'd love some.
Oh my
woman
God! I'm always
friendly.
telling her to stop it. It's crazy.
Really?
Oh, it's so bubbly and over the top. It's outrageous.
You're not used to it. Is the next generation R2 chip the R2D2?
It's not an R2 chip. It's an
R2
R2 model.
Is the next generation model the R2D2?
It is not.
How do you know? Wouldn't you do that?
You would, except that it's not ready yet. It's not good enough. And you're going to need an NVIDIA chip to make it work.
Oh, okay.
Think about an R2D2 with an NVIDIA chip in it.
Think about that. I thought I had one. We just didn't know because they were so ahead of their time. So you, at this point, the poly market, they were right to put that. It's not in the lead. This
Which one?
GPT-5.
It may not be in the lead. And the craziest part about this, which is the thing I've been thinking a lot about and talking to a lot of people about in the past couple of days who are living in this AI world, is, you basically train these models. It's almost like baking something in an oven. And then you open the oven and wait to look and see how your pie looks. It's a very strange phenomenon. Like, you don't really know what's going on inside the oven. And then you open the oven and you see the thing you've made.
Even the people that are doing the designing aren't sure what they're going to get?
Not exactly. They don't know exactly how it's going to turn out.
That's pretty fascinating.
And then they open the oven, they look at the pie, and then it's not always clear that just because you think you knew all the new cool ingredients to put into the pie, that the pie is therefore better.
Do you have any idea how to fix the things that aren't?
That I don't know. I mean, clearly they're trying to work on that.
Because you have no idea how to do my app, obviously. So
yeah. Well, the funny part about that
is you should blame GTP5 on that.
Well, I should blame GPT-5, and I should move to Claude. That's what everybody has told me.
That's up to you. I can't help you.
For this purpose.
I can't help you there.
Okay.
You make that. I have no idea what you're. Claude seems fine. I don't know.
Claude's Anthropic.
How's Llama? 12th son of the Llama. Big hitter at Llama.
I'm told Llama's not as good for this.
No?
No.
He's not. He's tight, dude.
But I'll tell
not
you
a big tipper.
I'll tell you what is pretty great. Grok. Grok is pretty great.
I'm seeing that, and I'm seeing
Grok is pretty great.
a lot of bragging from Elon and everything else.
Grok is pretty great, but unfortunately, not a lot of people using Grok. And I think that's one of the things that's frustrating Elon, and that's one of the reasons that he's lashing out at Apple and others, because I do think it's a pretty good model.
Well, this is a
And by the way, not just like because it gets
this is a good
data
problem.
from
This is a good problem to
Twitter.
have. This is a good problem to have, I think, right? I mean, they're really competing to make.
Yes, except all of these require so much capital. It's like everybody's just like they're burning
Which is
money
also
into a
good.
furnace.
Which is also good. If you know the velocity of money. I mean, we are in we'll have Hakeem Jeffries on a little bit later. I'm gonna have to ask him a question. I want him to point to like the worst thing happening right now.
You're referring to?
I don't know. I'm 2.7% inflation, 3% unemployment, new highs across the board in the markets. The borders closed. Iran's. I mean, I'm telling you my question, but give me the calamity.
Is that a question or a statement?
Where is the calamity right now? The only calamity that you have is the end of democracy. And the answer is socialism. The answer is socialism, and just keep harping on Orange Man bad, he's Hitler, and it's the end of democracy. That's all you got.
I think you and I both agree that I think there's a lot of good things going on.
Well,
but there's also a sort of Marxist sense about how it's all being done.
I think that's absurd.
You think that's absurd?
Totally, ridiculously absurd. Just sit back and just chill, like you said, chill, relax. New highs. Interest rates are probably going to get cut. Iran has been set back probably years.
I am not going to sit here and tell you that things are terrible. I'm just going to tell you
how
that
about the trade deals? The UK, the EU, the Japan. We're talking to China. We're going to Alaska.
Our standing in the world. How about that?
It's phenomenal.
You think it's higher?
Yeah. Why do you think trillions of dollars are coming here or earmarked to come here right now? You can't come up with a bad thing.
Because there's been a shakedown, my friend. There was a shakedown.
Whatever you want to call it. It's all about them. Did you listen to Charlie Kirk at all yesterday? These are all.
Yes, you got your
these are great
points
things
this morning from Charlie Kirk.
You got nothing. I was going to say you have nothing except the nebulous end of democracy BS. And that you came up with what he came up with.
As I said to you, there are certain policies I like. There are certain policies I like.
You mean the industrial policy?
The industrial policy
Why didn't you say something during the CHIPS Act?
It's a version of socialism.
Why didn't you say something during the CHIPS Act?
Well, because we had a whole conversation post-COVID and post-pandemic about how we needed to have a more resilient supply chain. That was the argument being made then. This is very different.
Okay. All right. He might not come on now because it's going to be like checkmate. But coming up, we're going to talk.
Who's that?
Hakeem.
Oh.
The leader Jeffries. We're going to talk more about the markets ahead of the next big economic data point. July PPI, producer prices. Those are just due out in just a few hours. Stay tuned. You're watching Squawk Box on CNBC.
It's.com.
Welcome back to Squawk Box this morning. Cisco in focus as we look at just after its fiscal fourth quarter results. Earnings revenue beating analyst expectations. Cisco's first quarter forecast also above consensus, but 2026 full year guidance was merely in line with estimates. Company CEO Chuck Robbins saying the company's AI infrastructure orders more than doubled Cisco's original target for fiscal 2025. Here's what's going on tariffs with the company. The company's CFO saying that Cisco has now, quote, some clarity, but is still operating in what he called a complex environment. Cisco shares are up about 19% so far this year. And you don't want to miss a First on CNBC interview. That's going to happen at 9:15 Eastern time this morning with Mr. Robbins, the company's CEO.
Futures ahead of the PPI inflation data this morning are still okay. The S&P and NASDAQ both all-time closing highs yesterday. Join us now. I called you Cafferty earlier. He's the other guy. He's the news guy for years and years in the New York area. You are not him.
I am not Jack Cafferty.
You are Jack Cafferty.
Jack Cafferty.
Equity portfolio, to like an abbreviated Cafferty. Equity portfolio manager, JP Morgan Asset Management. I guess just to try to distill down what you're saying, the market's not cheap. There's some positive things that you see happen, but we definitely have gotten back to a point where it's not cheap. And would you call it an AI premium?
Certainly, if we try digging into valuations, the market trades at 23 times earnings.
Is that if you back out the big stocks?
Let me back them out
for
you.
Is it 17 then?
If you look at a cap-weighted multiple, it's closer to 29 times earnings.
Oh boy.
23 across the index, and median stock is trading about 19 times earnings.
19.
So you have a magnificent cohort, and call that's been driving anything touching AI, and that's been driving 70% of the gains this year. That's not just chips, that's not just the software, but it can be the industrials that wind up building the shell, that build the air conditioning to keep those very expensive chips happy and operating in their environment. Step away from the AI trade, and the market's been a lot more becalmed. You can think of it sort of as the forgotten 493 for the non-magnificent seven names. And that's one where hopefully lower interest rates, hopefully policy clarity can let companies be a little bit more confident with their spending decisions, and you can see a broadening out of the broadening in the market.
Even in the Russell, which was what you probably say we've been seeing in recent sessions. Still not at an all-time high, but there's some broadening out. So we were talking yesterday about how we've gone from where we were really worried about everything in April and how it was going to work out. And then for a while we were hoping everything was going to work out. You say at this point, the notion is things really are going to work out, and even better than people thought. And that makes you nervous, probably.
If you look within numbers, earlier this year we were thinking 5% growth for the year. As a result of going through earnings season, it's closer to 7% growth. For earnings, that's really been just a surprise we've experienced, and our forecasts are for closer to 13% growth next year. So certainly there is some broadening to go there. I do think, if we step back to what we were experiencing in April, I actually thought it was going back to psychology, and you're thinking about Kubler-Ross's stages of grieving. Denial, grief, anger, all that, April 2nd to April 10th, and now we're working through bargaining and acceptance. Acceptance of what policy might look like, and bargaining in terms of what your tariff is going to be or what your export license will cost you. But effectively, we're working our way through, tell me the rules, and then I'll tell you how people play.
One of the Fed people said, it'd be nice to have a cut, but with labor where it is, or the unemployment picture, 4.2%, there's no rush, but inflation doesn't look like, at this point, it looks like we were worried too much about inflation. You expect it to start ticking back up and go above 3, where the Fed really does have a problem?
I think there's some inconsistencies in the economic narrative. Certainly, to the extent you've had people very recently pounding the table for not an intra-meeting cut, but a 50 basis point cut here and now, particularly in the back of the weaker job revisions 2 weeks ago. The Fed cutting 50 is a Fed that's panicking, that they've lost control and something horrible is occurring like COVID. Like you can't roll commercial paper and you've got $120 billion of it. That prompts a 50 basis point cut. The Fed is telling you they want to be friendly. The
Right.
dot plot is pointing to, we're getting the information we want. We're not getting what we want to see on the inflation front as quickly as we want to see it. Certainly, when you look within, there are some trends that point higher. Gasoline prices down, electricity prices higher. So certainly there is some, where the economy wants to go, more electricity for everything. That's not getting as cheap as people would have hoped. Exporting natural gas probably actually snugs that up over time. And yet, that leaves the Fed in a bit of a quandary. Unemployment's not that bad. Higher.
In the past, we had, I think it was Larry or something, said that, 3.5 is okay. And if you do the math in 10 years on 1.5 on inflation, it's very debilitating, that extra 1.5.
Yeah.
But Summerlin, who we're going to have on, says, these numbers, we don't really know exactly where. 1 to 3, anything 1 to 3 on inflation is within the Fed's. So now that people are arguing that maybe it can't be such an exact science, and that 3 is okay.
Well,
do you think 3 is
yeah.
okay? You like 2? Is the Fed going to move the goalposts?
I think the Fed moving the goalpost will cost the Fed credibility.
You do. So you like 2? I like 2.
I recognize that the only thing I have massive confidence in is economic data gets revised.
Yeah.
So anyone who completely hangs themselves on any one data point is setting themselves up for disappointment. I will push back to the idea we want to look at the overall trend in surprises, better or worse. Better surprises gives you more confidence in earnings. Ultimately, you are talking to an equity portfolio manager, so I generally think equities are a better place to be.
You're just managing portfolios. You're not setting year-end targets for the S&P, are you? You're not stupid enough to do that.
I'll give you time or level, never both. But I'll go back to the idea of, the trend in earnings has been higher.
Hit 7,000 this century. That's all I will say on the S&P.
I feel like I'm getting caught into a Kevin
Next
Hassett.
century.
A Kevin Hassett
By
1999.
2100, will we hit 7,000 on the S&P? As you say, you won't give me duration or price tag.
Direction is higher. Be along good companies.
That's good enough.
And manage your risks accordingly.
Okay. Thank you. Caffrey.
That's his name. Coming up, a lot more on Squawk. Apple reportedly looking at robots and security cameras as a way to jumpstart its AI offerings for consumers. We're going to bring you details on that story right after the break. Don't go anywhere. Squawk Box rolling on with a big show.
Good morning, welcome back to Squawk Box, live from the NASDAQ market site in Times Square. Checking the futures this morning, we're kind of flattish after some new highs again yesterday. Treasury yields have been moderating slightly. The 10 years down at about 4.2 at this point. You're looking at Deere, doing a great job there back in the control room. There is Deere, which is now down $33 right now. That's almost 7%. Earnings fell 24% over the prior year to $4.75 a share. That's still 12 cents better than estimates. Revenue fell 9% to $10.36 billion, but it did beat expectations. I guess this might be it. The company is lowering the high end, the top end of its guidance to guidance for net income to $4.75 billion to $5.25 billion. Probably has something to do, you would think, with a nice move that the stock obviously has had in the last 6 months or so.
Meantime, Apple reportedly getting ready to beef up its AI offerings with an assortment of household products, including tabletop robots, a smart speaker, and a new visual representation of its assistant Siri. A Bloomberg report saying that robot is the main focus of the AI product push, said to resemble an iPad on a movable arm, which would allow it to effectively shift position to pay attention to someone talking. So it would literally be moving from one person to another person to another person. Now, the report says the new cameras for an Apple security system are also possible releases, but of course none of that really gets at the underlying issue about the AI piece and what ultimately is going to be powering Siri and how that's going to work. Yeah.
And another IPO soaring in its first day of trading. Shares of crypto exchange Bullish gained more than 80% yesterday. The company priced its IPO at $37 a share, opened for trading on the New York Stock Exchange at $90, rose as high as $118 before settling at $68 a share. Bullish raised more than $1 billion in its IPO. It's led by former NYSE President Tom Farley, backed by longtime tech investor Peter Thiel. And you read any of the conjecture today, it was, Tom Farley was big board president. How's he gonna, he presided over some huge IPOs, Alibaba and others. And how's he gonna do when he's running his own IPO? Is he gonna maximize what the company, is it gonna be a successful IPO? And we're back into arguing about whether you left some on the table, or is it great to have such, pent up demand?
That's a great question.
I always have said that, since you're only issuing a few shares, that if you could have the entire company valued at some ridiculous valuation and all the shares are suddenly valued there, I'd leave the proceeds on the table and be happy that...
It depends how much you need the proceeds.
Right,
That's part of
it does.
issue.
Sometimes if it's shareholders, none of these guys need it. I'd love to have the whole company valued at a much higher level than... Think if it came right
If it can stay there.
If it can stay there.
If it can stay there.
Because you can't sell anyway.
Exactly.
Coming up, sports news. The NBA finalizing the sale of the Boston Celtics. And there's a team on the other side of the country that looks like it's going to get a new owner. Those details next. First, so take a look at yesterday's S&P 500 winners and losers.
to get it done.
Pretend I knew.
I'm very happy to pretend you know. I'm so stood. I know.
Okay. The NBA unanimously approving the sale of the Boston Celtics to a group led by private equity investor Bill Chisholm. The deal values the franchise at $6.1 billion. The transaction is expected to close shortly, and Chisholm will gain control of at least 51% of the team, with full control coming by 2028. Separately, a group led by Carolina Hurricanes owner Don Dundon has reached a tentative deal with the estate of Paul Allen to buy the NBA's Portland Trailblazers and keep the team in Portland. ESPN reports that the deal was worth $4 billion. And apparently he already owns something called the Carolina Hurricanes, which I'm told is a hockey team. Who knew?
Old as a hockey team.
Who knew?
Who knew?
I knew. Go ahead.
I'm going to tell everybody about this news story, and then we're going to talk about the thing and we're just going to talk.
I'm gonna plead ignorance, but pretend
It's
I'm
okay.
not.
The first
You
thing.
sure? So I'm not that? Okay.
Totally. This is not that, what we're about to talk about. This is just a news headline, and it's pretty interesting. Veteran investor Mario Gabelli, obviously somebody who's been on this show so many times, filing a lawsuit, and he sort of teased that he was going to do this for years, over Paramount Global's merger with Skydance Media, Gabelli's firm, seeking class action status on behalf of shareholders in one of his funds and other clients who held Class A shares of Paramount prior to the merger with Skydance closing last week. Now, that lawsuit's targeting former Paramount controlling shareholder National Amusements and that company's head, Sherry Redstone. Gabelli has complained that Redstone walked away from the Paramount Skydance merger with billions of dollars, while other investors weren't compensated appropriately. And basically, he's making an argument about the two tiers of shares and how that deal was done. Okay. Now we're going to go to a different issue.
I'll start with what my question was.
Go for it.
So, I don't really use just Google when I have questions.
Right.
Because it's just easier to go on Perplexity's on the front, I don't know. I barely know how to move those things.
I hear you.
Those icons. So I go use that. So my question is, why would they even want this browser when I basically use them for everything? And you started telling me they don't own anything.
So the reason why Perplexity would want to own
the browser,
if possible. First of all, the browser is valuable mostly because once you have the browser, you then control. Everybody goes in the bar there and puts in their search term.
Right, and that's how you make money.
People would use their browser, or rather would use their service, right? And that would create some kind of bigger moat around their business.
Perplexity.
The question mark around Perplexity has always been what the moat is around their business, because underneath their service is not, for the most part, their own models.
They haven't built any of those out.
They're using Claude, they're using OpenAI, they're using all of the different models. In fact, what the best thing they're doing is they've sort of built a custom service so that they can actually effectively ping different models to try to get the best answer in any given moment. Now, they've customized on top of it.
But they're not using the top level AI.
But it's not always their model.
They're using free stuff.
They use a lot of the free stuff. Some of the paid, if you are a paying user of Perplexity, they will route your question to sometimes other paying versions of other models, but they don't control the model. And one day, it's possible, OpenAI or Claude could cut them off.
Right.
That's also a possibility.
Right.
And so if you're trying to create, now the argument is if Perplexity can become such a big driver of business to all these other places that they would never want to cut them off.
Okay.
If you had the Chrome browser and you became such a big sort of player in the space, by the way, nobody could ever cut you off, and therefore you'd have a real defensive moat around your business.
Okay.
That's the argument.
Well, the thing that I didn't realize was that they haven't written.
Well, no, they've written code. I don't want to say they've written no code, because the other thing they've done...
It routes it to the other...
But a lot of what they're doing is routing the questions to different places that are not their own models. Now, they have some of their own sort of mini models, if you will, and there's lots of sort of wrappers that they've put on top of the stuff. By the way, some of the best things that Perplexity has done revolve around financial information. So if you actually are searching for financial information, they have really tried to make a go of almost being like a Bloomberg. And they are routing information, but they're also then sort of wrapping it in a way that the other models don't do themselves. So there is, I don't want to say this is like they're just routing questions to other people and they got nothing going on.
Right.
But it's just a different kind of thing.
They want to be valued at $20 billion, and they're talking about spending twice as much on something just to get it, as you said, to be a real company, to be a real boy.
Well, I think it also puts them into
Pinocchio.
By the way, it also puts them into the story. I mean, some people have argued that they're never really going to buy TikTok, they're never really going to buy Chrome, but we're now talking about Perplexity in the same breath as we are Claude or ChatGPT or whatever.
Right. Because you know I lived in a period where there were no pagers even. There were no phones. There weren't even flip phones.
I know.
There were just big Gordon Gecko. And those were new. And
I know.
people thought those were great. And when I got one in my car, I was like, people thought of, I mean, people, you know, women became interested in mine
When you had one of those phones in your car.
Exactly.
Wow.
It was a Porsche.
It was a Porsche.
Yeah. It was
Hey now. Okay. Coming up, the market for wearables and health tracking. We're going to speak with the CEO of Whoop about his clash with the FDA. This is a fascinating story. You got to hear what's going on. Has some big policy implications. And if you're a Whoop wearer or an Oura Ring wearer or into any of this kind of stuff, it's important stuff. Coming back in a moment. Now to a topic near and dear to many of our viewers. Those are wearable health devices. Last month, the FDA issued a warning letter to Whoop over the blood pressure feature on its device. Now today, Whoop's CEO, Will Ahmed, is joining us exclusively with a response to the FDA. And it's good to see you this morning. How you doing?
Good to see you, Andrew. I'm in the green, so I'm ready for you.
Well, thank you. What's your number this morning?
71%.
That's low, dude.
It's a green recovery. That's actually quite good, thank you.
Don't you like to be in the 80s, the 90s?
Well, it's because I trained so hard yesterday. You go up and down. That's how these things go.
Okay, so tell us what's going on here, because for those in the audience who may not understand what's happening, you had a feature on the Whoop. The FDA says you can't have that feature on the Whoop. You say what?
Well, just this week, we've pushed back on the FDA's claim that blood pressure insights is a medical device and should be regulated. As a little background for your audience, Whoop spent the last 3 years, tens of millions of dollars, innovating in the space and coming out with blood pressure insights, which allows you to use your Whoop to get a daily estimate of your blood pressure after doing a cuff calibration. And in turn, this feature will allow you to understand your blood pressure alongside a variety of wellness information. So alongside sleep, alongside exercise, alongside nutrition. And this is really pretty consistent with what the 21st Century Cures Act outlines as intended use. If a product or a feature is intended for wellness, it is not designed to be regulated by the FDA. The FDA's mandate is to regulate medical features that have a diagnosis. And you can see this with other physiological metrics where there's a wellness use case and a medical use case. So for example, with heart rate, heart rate monitoring's existed since the 80s with products like the Polar Chest Strap and others. Whoop does heart rate, Apple Watch does heart rate. Okay, if you do heart rate for exercise, heart rate for sleep, heart rate for stress, that's all wellness. If you want to detect that someone's got AFib, okay, that's medical diagnosis that needs to be cleared by the FDA. And just to be clear, we're pretty familiar with these different territories. We've done heart rate monitoring in wellness, and actually in the last 2.5 years, we worked with the FDA, we did clinical trials, and now Whoop has a medically cleared feature as well, ECG monitoring to detect AFib. So there's pretty clear lines of distinction for a number of physiological metrics, but for some reason for blood pressure, the FDA says that there can't be a wellness use case. And that doesn't make a lot of sense because there's an avalanche of peer-reviewed research that shows that blood pressure, not surprisingly, impacts your wellness.
So, Will, what do you think is happening here? Do you think there's an effort by the FDA to protect device makers who make blood pressure devices? Is it because they're worried that too many people are going to see blood pressure data and therefore take steps in certain directions around it in inappropriate ways? What is the argument?
Well, just to be clear, we have a lot of respect for the FDA. I think the role that they play is pretty critical in society, and we've worked with the FDA on a number of different features. I think just in this specific case, they've got it wrong. And it's in part because this is all new technology. Historically, you could only really measure blood pressure with a cuff. Whoop is one of the first wearables in the world that can provide an accurate estimate from the wrist. So that's fairly unique, and you have to overcome past precedent in your analysis of that. But I think this is a bigger theme, which is, what are the policies in this country that enable technology companies like Whoop to innovate? And go ahead.
Will, I was just going to say the bigger issue, which I think is where you're going, is all of this stuff is going to start to converge, right? And by the way, we saw this whole issue play out in a very unique way in the hearing aid business, for example, right? There were lots of folks who wanted to get into that space, make it effectively a consumer product. Your AirPod could be a hearing aid effectively if you wanted it to be. Could you really say that it wasn't? I mean, I think all of these devices that are sort of quasi pro / consumer come together at some point, and the question is how you think the FDA is going to treat all of this stuff.
I think it's important that there's just consistent policies and consistent treatment. The 21st Century Cures Act makes it very clear that features that are intended for wellness are not supposed to be regulated by the FDA. And the FDA should follow that guideline, which is the law. And we've seen the FDA do this successfully with things like heart rate and pulse ox and skin temperature and sleep and respiratory rate. And so in the case of blood pressure, there should be a wellness use case, and that's what WHOOP has put forwards.
What's the damage to you if they say no mas, you cannot do it. It really cannot happen, and you appeal the decision. By the way, have you talked to like RFK about this?
He's dead.
I met with Secretary Kennedy a few months ago, and I would say overall his perspective on wearables is that they're a tool to give Americans access to health data. I think he's generally pro-innovation and generally pro-wearables, as he's stated quite publicly.
So if he's watching this, maybe he's in your corner.
RFK Jr.
RFK Jr., yes, thank you, Joe.
The other one's dead.
The other one is dead. That is true.
Still dead.
Well, I think overall... You go ahead, sorry.
No, go ahead, Will.
I was just going to say, look, I think overall the current administration is in favor of wearables and in favor of giving Americans access to health data. But this is really a bipartisan issue. This doesn't actually deeply reflect the current administration as much as it does what is the overall policy in the United States for innovation and for giving Americans access to health data. We've overwhelmingly seen really positive support from our members on this feature. They're getting accurate estimates every day. They love it. They seem to be in our court to fight this, and so we're going to continue fighting.
Hey, Will, they're playing us out, but I got one last one for you because I followed your company for a very long time. I'm a Ring guy. You're a Whoop. It's all this. It's in a similar space. Have you found that doctors in America are taking your data more seriously? Because I find, and maybe I'm going to the wrong doctors, but I'll sometimes bring data to the doctor and they'll say, oh, well, that's coming off of one of these devices, that's fine. Now you got to go in for a sleep study or a this or a that. And by the way, when you look at some of the devices that they're using, the medical guys are using for this stuff, it's not even as good as the consumer grade version.
Well, I think that's right. I think that the wearable devices are getting more and more accurate. Whoop has certainly gotten much more accurate with our Whoop 5.0 and MG, which we just came out with. And I sense that doctors are actually starting to get more comfortable with using this information to talk about overall lifestyle and behavior and health more generally. Ultimately, these tools provide information that allow consumers to take control of their health. Our goal at Whoop is to help people live longer and healthier. And so that should be woven into the overall healthcare system, and that should be woven into your relationship with a doctor.
Hey, Will, thank you for joining us. It's been fabulous to follow just the success of this company, and we look forward to following what happens next with this specific debate. Thanks again.
Thank you, guys.
And get some rest, dude. This whole thing with his number's not good enough. He shouldn't be working out that hard.
We must be late, because all I can say is we'll be right back.
It is 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan. Becky is off today. Got a whole bunch of big stories though taking place. The top story right now, President Trump says he's going to name the next Fed chair a little bit early, he says. I can't do the Fred. A little bit early.
A little bit
early.
Yeah.
Says he's considering he's considering 3 or 4 people for the central bank's top job. However, we've heard the president will consider as many as 11 candidates to lead the field, to lead the Fed and maybe lead the field. So we'll see. I'm calling it the Apprentice Fed Edition. Meantime, we're going to speak with one of those reported candidates, former George W. Bush economic advisor Mark Summerlin, in just a few minutes. And more economic data for the markets to absorb today. The July Producer Price Index, jobless claims, and import prices. That's all coming up at 8:30 a.m. Eastern Time. So stick with us because that very well may move the market in a big way today. And then there's this. The Chinese AI startup DeepSeek reportedly delaying its next generation R2 model. This after having some trouble training it using chips from Chinese tech giant Huawei. The Financial Times reporting DeepSeek ran into problems as it worked to train the R2 model with Huawei's Ascend chips, which had been pushed by the Chinese government. The article says that led DeepSeek to fall back on NVIDIA chips for training while using Huawei's chips for inference. And that's all quite important in this larger debate because it means that the original DeepSeek model likely was built on the back of NVIDIA chips.
Right. Well, I've got a lot to tell you about.
What do you got to tell me?
Well, about Perplexity.
Oh, well, we were having we should tell the audience, we were having a debate about Perplexity. You asked, how does it actually work?
Why is it going to buy why does it need to buy Google Chrome? You say because they really didn't do any of their own really LLM stuff. And
well, no, they don't have any of the large language frontier models of their own.
I asked
them. They sort of customize on top of it.
Right. I asked I said, do you really just steal everybody else's stuff?
They're not stealing other people's stuff. They pay, by the way.
I know, but they got very defensive.
What did you ask it?
The chatbot.
So what did you
ask
say?
it, do you really just steal from other AI companies and you don't really have any of your own stuff that you built with
They have built, as I said, they built the customized.
They confirmed everything you said.
So what did they say?
Well, they said, well, that's really not fair. We do borrow things, but our own AI stuff enhances some of the stuff we get from everybody else.
And that's what they're doing, yes.
And then at the end it said, so if you value fresh, cited answers from multiple models, we offer unique strengths. But it is true that we really haven't done any groundbreaking original LLM
That's what it says.
research.
That?
Yeah.
Wow.
Very defensive. I was laughing.
But what is good about it is it's super fast.
Yeah.
And what they're doing is routing the questions.
Well, you're right.
To the,
They really
the
haven't.
models.
They're really sort of getting a lot of their stuff from.
And that's always been the question. Then, like people have said, should Apple buy Perplexity, for example? The question is, if you're buying Perplexity, not say what are you buying, but that is the fundamental question.
So my question
it doesn't solve the.
The first thing I said was
they would own their own
nuance.
frontier
Whenever
models.
they say it's nuance, it's like you've nailed them, because that's the first thing. Now you're taking it back. You told me all this, and now you feel bad that I
like the guys who started. I like the guys who started that company.
Well,
and I think they've done a very good job.
I use it all the time.
And it's super fast.
It is.
Actually,
It's much faster than
some
the
of the other
others.
models. Exactly. Or I should say, going directly to some of the models. Okay. Meantime, we're going to somebody who is not an AI right now, Frank Holland, a real person with a look. Free market movers. Good morning, sir.
Hey, good morning, Joe and Andrew. Very interesting conversation you two are having. We're getting some earnings movers right now. Why don't we start with Cisco? You can see right now shares are down just about 1%, and that's despite a beat across the board in fiscal Q4. Current quarter guidance, that was slightly above estimates. Full year guidance, that was largely in line. However, Piper Sandler said in a note this morning that full year guidance was actually below what the bulls are hoping to see. Again, shares down just about 1% year to date. Big move to the upside, up over 50%. Then coming up, 9:15 a.m. Eastern time, we're going to have much more in the quarter. CEO Chuck Robbins, he's going to join Squawk on the Street to discuss the quarter, AI, networking, the whole thing. All right, meantime, we have another earnings mover this morning. We're talking about Deere. Take a look. Shares are sharply lower, down just about 7.5%, despite beating Q3 profit and revenue estimates. The farm equipment company saw its net income fall 26% year over year. Tariffs, they weighed on its construction and forestry business, which saw a 47% year over year decline in operating profit. Deere also lowered the high end of its net income guidance. Investors are going to be looking for more color on this quarter when the earnings call starts at 10 a.m. But right now, shares down about 7.33%. Also, another name that had a big run up this year, shares up over 35%. We're going to round things out with Apple, which is just very slightly in the red this morning. You see it's down just about 0.25%. A kind of a rare down day for a stock that's really been red hot in August, up more than 12% this month, and winning in 5 out of the last 5 days. It was up about 1.5% yesterday after Bloomberg reported that Apple was planning an expansion into AI robots. AI's actually been kind of a negative for the stock recently as its program has lagged its competitors. Right now you can see pulling back about 0.25%, but a big upside move in the month, year to date, up just about 5%. Back over to you.
1,000 in my.
Thank you, sir.
President Trump signing an executive order last week that would make it easier for 401ks to include alternative investments like private equity and crypto. In May, retirement services provider Empower announced its own program to pave the way for private markets to be included within retirement plans. Joining us now is Ed Murphy, Empower CEO, who can confirm that we were together at 1 Beacon Street at the Merrill Lynch office. We were in the same, you trained a little bit after I did
Right.
at OLP, One Liberty Plaza, and you had the same Series 7 book to study, and you went into production in Jack Joyce's office where I was. But you
Here
stayed,
we are, reunited.
and here we are. Were you a success? Did you make vice president?
I think I made senior vice president.
Ooh. Well, now look at you.
Fancy.
You're like a CEO, and I'm reading a teleprompter. That was the thing that kind of that angered me. Anyway, it's good to see you. We
Nice
knew
to see you.
all the same people, and a lot of them are still in the business.
It's incredible. Yeah.
It really is.
Yeah.
And,
Amazing. Great
incredible.
firm back there.
Andrew is hot to trot on this subject, I think. Private investments.
Love it.
And you for it. I mean, you got.
I don't know if I'm excited about it, and I'm a little worried about it.
Yeah.
How about that?
Yeah, that's fair.
But everybody should have, for their retirement, should have many options as possible. And people have done very well in private equity, but usually you had to have a lot of money to do that.
Yeah, we think about this as a sort of democratization of private assets, right? I mean, if you think about defined benefit plans, pension funds, endowments, foundations, they've been investing in private asset for 30 years, right? 3 decades with really good results and positive returns. And if you look at the defined contribution space, we have 120 million Americans in the system, 12 trillion in assets, excuse me. But no, the focus has always been exclusively on public equities and public debt. And I think the time has come to open up the aperture. And there's no reason why savers in the 401k system shouldn't have access to the same strategies that endowments, foundations, defined benefit plans have had access to. And by the way, I think there's so many examples of this around the world, you know, whether it's the Nest system in the UK, whether it's a superannuation in Australia. Many of these defined benefit plans are allocating anywhere between 15 to 40% to alternatives. And so, you know, what we've done is we formed a partnership with several alts managers to essentially provide access to these strategies.
So the question that I have about the private piece of this
Yes.
is 2 things. One is, yes, over the last 30 years, private equity, if you will, and some of these private alts have outperformed the market. They truly outperformed the market in the first 10 and 20 years because it was a less mature business than it is now. There is a convergence happening between the public market and the private market as it relates to just valuations. That is actually happening, and that meaning performance has actually come down, not up, in privates. If you just sat in the S&P in the last 20 years, for the most part, you probably outperformed actually most privates. You just did. And so the question mark is, for the illiquidity of whatever is going to happen, is that a worthy trade for most people? How are we going to get everybody out when they need to get out? We've seen when things get a little bit complicated in the markets, some of these sort of semi-liquid products, they kind of work, and they kind of work for the long term. They kind of don't necessarily work for the short term.
Right.
And if you're a retiree who all of a sudden needs access to that at that particular moment, how you sort of work around that? Do you do sort of like target dated products where effectively people have to get out before a certain age, and then what happens there? And those are the things that I sort of think about, and just how much leverage is in the system or not around some of these products.
Look, I think those are very fair questions and fair points. What I would say is the approach that we're taking is we don't think anybody should allocate more than 15% of their assets to private assets. And the way we think about it is it's really through a collective investment trust, or to your point, a target date type construct, where you have a private asset sleeve, but sitting alongside you have a liquidity sleeve. Now think about that. If that's 15% of your total investable assets, the other 85% is in the public markets, where you clearly do have access. So I think we can approach this in a way that's prudent, that meets the fiduciary standards. And if you think about the length of savings in these programs, I mean, typically people are investing for 25, 30, 35 years, so they actually align pretty well with private assets. And I can acknowledge that from a timing perspective, it may not be ideal. I think the way we think about it at Empower, and we have 19 million customers and 2 trillion on our platform, the way we think about it is we want to provide access, and ultimately it's the fiduciary, the plan sponsor, in conjunction with the advisor and the investment consultant, that actually makes the determination around timing and the underlying strategies that they want to pursue.
Do you think that the fee structure for everybody else is going to come down as a result of this? So when I say that, meaning the privates, the private alt community has a fee structure that is meaningfully higher than the public space.
Yes.
The question is, and when you look at some of the returns, it's even hard to actually even figure out what the real returns are, post fees, all of that. Do you think that changes if you have public players playing in that space?
I do, over time. I mean, if you think about the market, it's 12 trillion today and it's growing at a 6% CAGR. So if you forecast out 10 years, the defined contribution market is going to be a $20 trillion
Is there
market.
any defined benefit market left?
Very small, very small. So if you think about a $20 trillion market, you could see over the next 10 years an allocation to privates that's anywhere between 10 and 20%. It's zero today.
Right.
So the opportunity for investors and for alternative managers is massive.
Right.
I mean, this could be a $4 or $5 trillion market. I mean, there are some that would advocate more of a 60-40 split, 60% public equities, 40% privates.
Mm-hmm.
So I think it's going to take time, Andrew, because Joe highlighted the executive order, and we're waiting for clarity, regulatory clarity and direction from the SEC and from the DOL, and that's going to be really important over the coming weeks and months.
Thanks, Ed. Nobody calls you Eddie, I guess. Really?
No, they do. Eddie Murphy.
Did when you left, you were at Merrill 6 years. Did you go to another wirehouse, or did you
I went to
leave
Fidelity.
That's smart. I
That's
should have
it.
never left Merrill. I really should. That's a great firm. You know who sucked me away from that? Lehman Brothers, which the retail part of Lehman Brothers in 1984 was a bucket shop. Over on the record. Did you know that? It really was.
Yeah.
It was
Yeah, that
brutal.
was-
Huh? Yeah, it was brutal. Anyway, it lasted no time. And then went to another great wirehouse, EFI. Good to have you on.
Thank you.
Thank you. We got a big interview coming up. President Trump's reported short list to replace Fed Chairman Powell is getting longer. It's said to include our next guest, Mark Summerlin, who served as Deputy Director of the National Economic Council in the George W. Bush administration. We'll get his views on the economy, rates, and the Fed's independence next. Later this hour, Transportation Secretary and Acting NASA Chief Sean Duffy on the latest executive order to open up competition in the commercial space industry. That's at 7:30 a.m. Eastern. This guy's pretty good on TV. Later, watch. Squawk Box coming right back.
Check out shares of Coach Parent Tapestry, earnings of $1.04 a share, coming in 2 cents above estimates on revenue of $1.7 billion. Also beating expectations for the full year. Tapestry expecting a 60-cent earnings hit, though, from higher tariffs. Earnings guidance coming in below estimates. You can take a look at that stock now off a little over 6% on the back of that news, Joe.
If you always have to say Tapestry, parent of Coach,
Shouldn't it be called
was that a good move? Where everybody goes Tapestry? What is that?
mean,
You go,
why-
parent of Coach. Oh, yeah, okay, yeah, I know it.
Alphabet, parent of Google.
Right. Why do they do things like that?
It's a whole
Do you
segment.
buy your
That's a
sneakers
whole
at
segment.
Venator? Our next,
We got a big guest here.
we do. Our next guest will weigh in on the state of the economy. We've already been talking about this gentleman
This guy's a
all
big
morning
deal.
long. The Fed, the central bank's leadership, and more. Join us now, Mark Summerlin, who served as Deputy Director of the National Economic Council in the George W. Bush administration, now Managing Partner of economic consulting firm Evenflow Macro, and Pearl Jam, and has been mentioned as a possible candidate for Fed chair. I think it is. Great to have you, Mark. Thanks for joining us this morning.
No, thank you for having me, Joe. It's a privilege to be here.
And I'll tell you why, if your ears were burning, why we were already talking about you. I was trying to summarize some of your feelings about where the Fed is right now, and I was citing your notion that some of these numbers we have learned are so maybe revisable or not like just you can't. They're not just concrete numbers. And 1 to 3% on inflation is about the best that that agency can give you, and that the Fed is, if it's 1 to 3, they're within the range. And if employment looks weak, you should cut.
I completely agree with that. I mean, we can't measure inflation with any type of precision. We actually impute a lot of the numbers, and the Fed can't control inflation with any sort of precision down to the decimal point. And so if you look around the world, what we see that almost every other central bank does, in fact, there are 48 of them that have an inflation range. And it's just common sense. It's like we want inflation to be 2%, but because we can't exactly know exactly where it is or how to control it, we pick a range, something like 1 to 3%. We're well in that range right now. If you look at CPI that came out this week, in January, the 6-month annualized CPI rate was 3.6%. That's down to 1.9%. There are other measures that show we're in the 2.5 to 3, but pretty much everything's in that kind of 2 to 3% range right now. So that's not the worry. The worry is that these job numbers got revised down very big, unusually big. And before that, we had a disconnect where GDP numbers have been weak, about 1.1% for the first half of the year. Jobs number has been strong. And then the jobs data got revised towards GDP. And so we now know that the economy has been growing weaker. And so a 4.33 Fed funds rate is just too high. And the market will always tell you what you should be doing. And we see the inversion at the front end of the curve, which is over 50 basis points, tells us that we could easily do a 50 basis point makeup cut because the data had been wrong in the past without disrupting anything at all. So it seems like pretty much a no-brainer to me.
That's a Jeremy Siegel. To look for the inversion, you can easily find it with where the Fed is and where the 10-year is. One of the most fascinating things in reading, Mark, some of your comments, tariffs, are they inflationary? Because that's what this is all about. That's what we talk about all the time, and that's what we've been waiting for the last, ever since Liberation Day, waiting for tariff inflation. And you point out, and this is profound, that tariffs are a tax increase, but you say, albeit one that is partially paid by foreigners, which is almost heresy at this point. The other day on a competing network, I saw a gotcha question to Treasury Secretary Bessent, who pays these? The president says that the foreign countries pay them, and they took a victory lap because Treasury Secretary Bessent acknowledged what we all know, that the importer, we know that they pay that. However, you could see some foreign entities not passing along, charging less because they want to maintain market share. So they essentially kind of are paying it in other countries, at least a portion of it.
Yep. Yeah. I mean, I think almost everything about tariffs has been wrong this year. I'm not sure why. But first of all, after everything is settled and done, inflation will be lower because of tariffs, because they are a tax, even if part of it falls on the U.S. And so you shouldn't be super worried about that if you're the Fed looking forward. There are lots of pockets that can pay the tariffs, and it turns out that it's being absorbed mainly in corporate profits, and some of that is foreign corporate profits.
Some of it is foreign corporate profits. Because now we're whenever Trump says that, elites on the other side roll their eyes like it's like he doesn't understand. It's the dumbest thing in the world, and in fact, some of it is coming out of foreign.
Mark, my question, which relates to tariffs, is I can totally get behind the idea it could be a one-time tax, if you would, which I think is what you're reflecting, this idea you could see through it if it's a one-time situation. The question is whether the president has decided that he's actually going to use tariffs as a negotiating tool, a chess piece, in all sorts of other discussions and debates, so that even the numbers that have been agreed to may move over time. So it may very well be that the president may have to go to the EU at some point and say, look, I need your help on, digital taxes for big tech. I don't like what you're doing. And as a result of that, either I'm prepared to raise tariffs unless you fix that, or maybe I'm going to give you something to lower the tariffs if you do it. And as a result, there's a sense among some in the business community that whatever these numbers are, they're not necessarily locked in place, and that would make the job of the Fed that much more complicated.
No, I mean, there are definitely ways that the tariffs have been done that I don't agree with. For instance, I don't understand at all why we would be tariffing inputs into the country like copper or other things that we need. When you're competing with China, it doesn't make any sense to tax copper coming in from Chile, for example. And we also shouldn't be tariffing, parts that companies in the U.S. need. And then, businesses do need certainty at some point. And so the negotiations do need to kind of settle at some point, because we are seeing uncertainty weighing on the economy. I mean, that's the main reason why the economy grew at 1% instead of 2%. And so, tariffs are a tax. Every tax has some bad side effects to it. But it is the first brand new source of revenue that we've had in my lifetime for the federal government, and we need more revenue. And so I try to just look at all sides of it. But yeah, it would be better to get to a place where we're settled on a lot of this and go back to really focusing on our main competitor, which is China.
Mark, when did you first get wind of the possibility that you were under consideration? Have you been interviewed by the Treasury Secretary at this point? Got any phone calls? Are you expecting some?
Yeah, I think this is pretty well known. So, Secretary Besson's was a day one client for my firm. Right. So we've been kind of talking about monetary policy weekly for probably 12 years. So he knows pretty much everything I believe. I got a call last Wednesday that just said there was going to be a list. I was going to be on it. And that's as much as I know right now. I'm out here in Jackson Hole, so I wasn't clearly prepared to be in the right place when that happened. And so, I'm waiting for more guidance on where we go from here.
Do you have the right attitude? I don't know if the president was just, if you thought rates needed to go higher, if you were hawkish, is this the kind of job you'd really want? Seems like you got a great job right now. Would you take it if asked?
Yeah, I think if it's the Fed chair, it's mission critical to the world, and I think you have to be willing to do that. It would obviously depend on I've never met the president. It would depend on us seeing eye to eye. The Fed is independent. The Supreme Court has said the Fed is independent. And so you have to go into it knowing that every day you're going to walk in and just do the best job you can for the American people. and you're going to get criticism, and be kind of prepared to deal with that. But ideally, you'd want to go in knowing that you were in sync, and in sync goes both ways, and that would be part of the process, figuring that out.
All right, very good. Mark, appreciate having you on. I was going to ask you whether thoughts arrive like butterflies, but no one would know what the hell I'm talking about. But it had nothing to do with Pearl Jam, did it? Even flow. This is. Did it?
We try to be even-handed, and we try to monitor the flow of money around the world, and we happen
seems
to have
very
a
even.
theme song.
He
so,
does. He just mentioned In Sync too, so we're talking about a lot of bands, Mark. But we do it all here. In the old days, we would have played. We would have immediately queued up. Just said "bye bye bye" is a good one in my ear. You're funny, producer Mark Summerlin. Thank you. Good to have you on.
Thank you
Hopefully,
so much.
to see you. Update us if if it gets narrowed down to you and somebody else. Let us know.
Okay, will do, Joe.
All right,
Appreciate it. Hey, great to see you. Thank you again. When we come back, coming up, from highways and runways to the final frontier, Transportation Secretary and Acting NASA Chief Sean Duffy is going to join us in a wide-ranging interview on everything from safety in the skies to the latest developments in the commercial space industry. We'll talk to him next when Squawk Box returns.
Time now for today's AFLAC trivia question. What was the first feature-length motion picture with synchronized sound? The answer when Squawk Box returns. And now the answer to today's AFLAC trivia question. What was the first feature-length motion picture with synchronized sound? The answer, The Jazz Singer, which was released in 1927.
Welcome back to Squawk Box. President Trump signing an executive order entitled Enabling Competition in the Commercial Space Industry. That order aimed at expediting innovation and streamlining regulation. Joining us right now on this and so much more. I want to talk about what's going on at the FAA and planes and all of that. Transportation Secretary and Acting NASA Administrator Sean Duffy. Mr. Secretary, good morning to you.
Good morning.
You want to talk space or you want to talk planes first, sir?
You call the ball. Let me know what you want to talk about, Andrew.
I want to go planes first, just because, you know, when we told people that you were going to be on, I got a whole slew of texts and people sending stuff over X saying, you know, where are you really when it comes to hiring as many people as I know you've been trying to in terms of traffic control and all the work that you've been doing on that front. If you could just give us almost an update, status report.
I mean, just real quick, there's two parts to it. We have to update all of the infrastructure and technology around air traffic control. That's one problem. We got $12.5 billion in the big, beautiful bill. A down payment, we're going to need $31.5 billion to do the whole job, which, by the way, for the Congress is chump change. It's a really great investment. The return will be 10 or 20x on what money we put into air traffic control. But in regard to controllers, if you're flying over the summer, it could be weather, it could be mechanical, but a lot of times it's that we don't have enough controllers on the job. And so what we've done is said, hey, we have to bring more controllers into our academy. We've streamlined the process, the application process, to get more controllers in, number one. Number two, we're taking the best qualified candidates on the entrance exam and putting them in the academy first. Andrew, we have a 35% washout rate at the academy. So we're losing a lot of our kids. And by the way, I'm okay with a washout rate, that's fine. But let's get the best young people in there so they can get through the program, take the final test, and get into a tower and get trained up and get certified. So that process is underway. I've also offered controllers, after 25 years, they get to retire. Many of them are retiring at 48, 52 years old. I'm offering them a 20% upfront bonus, cash, to stay on and keep working for us. And it's going to be nibbles, bits and pieces that we're working on that is going to make up this 3,000 controller deficit that we have right now, as well as we're going to relook at how we're moving controllers throughout the airspace and make sure we have the right people in the right places to alleviate some of the delays that Americans are feeling as they're traveling, especially in the summer.
Mr. Secretary, tell me this, and maybe it's the algo, the for me algo on X and Instagram and TikTok and this and that. But I get sent, I don't know if you do, Joe, so many more videos, maybe it's that more people have their phones out, of these sort of near miss incidents. Yeah. And you constantly see these reports in a way that I don't think I saw before years ago. And what I don't know, is that a function of more people with their phone out, or is that a function of there really are that many more near miss incidents these days?
Well, listen, I think it's a function of maybe both, right? I think we're seeing more of it. But also, and there's two things at play. Number one, we have to have our pilots that pay attention, right? And again, when we're on tarmacs and you have these near misses as planes are taxiing, it's like almost driving a car. You got to stay away from the planes that are around you. And again, a lot of that goes to pilot error. But we are going to put sensors on our busiest runways so our air traffic controllers can see planes, and if they get close, they can warn them and more actively control them. Number one, but the near misses as well. On runways. The one in Chicago with the Southwest airplane, and I think it was a FlexJet aircraft that was crossing an active runway. Right. Listen, unacceptable, untenable, partial pilot error, but also the new technology that we're going to be able to deploy in our brand new air traffic control system will help alleviate it. And Andrew, think about this. We have drones that are going to enter into the airspace. The eVTOLs, the vertical lift, Ubers in the air, all of that's going to make our airspace more complicated. So we need a far different system, far different software to navigate the space, make it more efficient, but it's also going to make it safer as well.
Okay, this was not actually on my question list, but since you went to eVTOLs, it made me think of something, which was there was a piece in the New York Times over the weekend. It was an op-ed editorial piece about taxes, actually, on commercial planes, on private planes, and now we're going to have eVTOLs soon. And the argument being made in that piece, if I recall, was that effectively private aviation represents something like 7% of the planes in the sky, but between the fuel charges and everything else, fuel taxes and everything else, only represent effectively 1% of the taxed revenue relative to the commercial flights. And there's always been a big debate about that. And I'm curious where you land on that issue and how you think about it, especially as the skies are going to be opened up and even more democratized. And I imagine there'll be even more, therefore, quote unquote, private flights, if you will, in the sky in the future.
Listen, I think it's how we use the airspace, right? So if we're using terminals that cost billions of dollars, and you're an airline, I think you're going to pay a higher tax and higher rates as you use those facilities. Oftentimes, private aviation isn't using the massive infrastructure around airports. You're using far less of that. Again, I'm going to leave that to the Congress, Andrew. They're going to figure this out. But I do think everyone who's using the airspace should help pay for it, and oftentimes they're doing that through their fuel
I think
tax.
the question, at least as I read it, was should the charges effectively be based on planes versus people, if you will, which is to say that if you're an air traffic controller, if it's a commercial flight or a private flight, it doesn't matter to you. That plane has to land and that plane has to take off. And effectively, should they be paying something somewhat similar, even if one's carrying 300 people and one's carrying 4 people, because it still requires the same amount of people, if you will, in air traffic control and the other folks to service that plane. Now that's different, I agree, than the terminals, and that's a separate story.
So if you're flying your Gulfstream, Andrew, and you have there's a lot of infrastructure around taking off and landing your plane. With an eVTOL, right, it's electric and it is a smaller pad, way smaller infrastructure around how I launch and land that vehicle. And so the structure on what you pay for is going to be way different. And I think we have to take that into account. So I don't think we want to tax people. I think we look at the infrastructure that's used, whether it's through air traffic control, or through the infrastructure on airports or landing and launch pads. That cost differential is significant.
What do you think about privatizing all of this?
Listen,
Other countries have done that.
It's a great question. So we took that up in President Trump's first term. I was in Congress during that debate. It didn't pass. I have virtually all of industry, groups that don't always agree on air traffic control are all agreeing that this has to get done. I'm not wading into privatizing air traffic control. I have a group together that's going to take on a huge build. And I need everybody on board for that. If the Congress wants to consider that after we're done and I'm long gone, so be it. But right now, I think the Congress has to make this investment. And if there's a conversation around privatization, again, I'll be on the beach somewhere, Andrew, but I'll be out of the DOT by then because it's going to take us the next 3.5, 4 years to get this bill completed.
Mr. Secretary, how was the department when you got there? I asked AI different things, and he asked how did Secretary Buttigieg leave the department? They say in pretty good shape. That's what AI said. He a lot of infrastructure programs that he put together. He might run for president. Could he run on his record at the Department of as Transportation Secretary? In your view, I know this.
No,
I can't. I know what answer to expect.
So let me tell you why. A lot of people, when they have a job, they use that job to run for a different office. And I think that's a huge mistake. And I think Mayor Pete Secretary Buttigieg was running for president while he was the Secretary of DOT and didn't pay attention to the basics. And so he had a focus truly on DEI and climate and the cost of that to the American people. And again, everybody wants their roads and bridges, Democrats and Republicans in states and districts around this country. They want their infrastructure. We diminished the tax dollar that could build roads and bridges because he put all of these constraints around it because he was running for president. In regard to air traffic control, I inherited a system that was dilapidated. And so we have to step in and recognize what they didn't do and fix it. Pete Buttigieg should have seen that and should have started the process before I got there. But instead, he was out campaigning. And again, when you're focused on changing the names of cockpit to flight deck or airman to aeronaut because you're concerned you could offend someone, all the while you have 84 near misses in the Washington, D.C. airspace between helicopters and fixed-wing aircraft, and you don't look at that, I don't know how you're going to run for president on that record. You didn't do your job. And had he done his job, we wouldn't have inherited all of the problems that we have right now that are going to take years to fix. He could have got a 4-year jump on us. And he didn't do that. And so, no, I don't think this is a record he can run on. They squandered $80 billion on DEI and climate crap.
Do you think that some bridges and highways are racist? I asked that. Did he really say that? And he really did say that some of these.
Listen, I want to be fair to him on that. There was back in the '60s were there roads and bridges that divided communities. Yeah, but it happened around the country as we were building an infrastructure around the country with highways and bridges. But were they racist? No. And I think again it's playing to the left-wing political base to get favor for a presidential run. And that's the problem. And when you look at what I inherited, and to say that Pete Buttigieg could run on that record, I don't think he can.
What happened with the charging stations?
You know what? That is a great. When I was interviewing for the job with the Senate. I asked them. This is $7 billion to build charging stations around the country, and you built 84. The problem, Joe, is, as you know, if you put all these rules and regulations in place, and then send the money out, the end user, the states that were trying to build the infrastructure, couldn't comply with all the crazy rules on DEI and green that Pete had put into the project. And so what I've said is, I'm going to take that garbage away. And if the money is still there, we're actually going to build charging stations. If the American people, and by the way, I disagree with that policy. I don't think we should build them, but the Congress gave the money. And if they gave the money and we're going to spend the money, let's give the American people charging stations for the $7 billion, not a green hit list that you can run on when you launch your campaign for president.
Okay, I want to get to space. We're still on the ground, then we're in the air, but we're not all the way to the moon yet. Okay, so you're trying to get to the moon. I know. We can talk about whether we should be trying to get to the moon. I want to know, in the EO, there's a line that says that there are effectively states, and this is going to help you, that are hindering spaceport infrastructure development. What does that mean? Who is doing that?
Well, listen, what we want to do is have spaceports around the country that make sense for the private sector. By the way, today was the 1,000th private launch that's taken place. That's taken 35 years. We're going to get to the second 1,000 in less than 5 years because of President Trump's executive order. And so, again, when we developed this technology, right, we're launching it into space with our corporate partners, that we had 100% of the business. Now we have 60% of the business because we have too many rules and regulations, whether it's from Commerce or FAA or NASA. We're trying to streamline that process, speak as one government, make it easier to launch out of America so we don't have flights going, whether they're to China or to Russia or to New Zealand or to Europe. We want all the launches to happen here. We want to keep that industry in America. And so that was the purpose behind the EO. And again, we want to look for great places. And again, the president could have been talking about California in regard to the feud with Elon and their lack of desire to permit some of the launches. But we got to work with willing partners. You got to want this infrastructure and these jobs in your community. Which, by the way, think of, so we talk about space, and again, it has democratized. I mean, if you have a great idea, either Joe or Andrew, and you're like, listen, I have a satellite that I want to put into space, you couldn't have done that 15 years ago. But now for a little over $1 million, you can get your satellite into space because of the innovation that's taking place with SpaceX and Blue Origin and others. It's pretty remarkable what's happening. We want to make sure that continues, but it's also America.
Help us understand this piece of it, which is competition to space, which is right now a large majority of those satellites are going up on SpaceX aircraft at the moment. Obviously, Blue Origin getting into that space, and there's a couple of others behind that. Yep. But how do you sort of even see the competitive landscape right now?
In the sense of the corporate competition, I mean, listen.
Corporate competition, because while there's a couple of players around, on the whole, if you really just look at the numbers, it is Elon Musk and Elon Musk.
And Elon Musk, Listen, SpaceX is wildly impressive. But I think it's critical that we make sure we treat everyone fairly, and we want a robust set of companies that are launching into space. Competition drives price down, it drives innovation, and so that's what we want to see at NASA. And I don't think you have to attack SpaceX or you have to prop up Blue Origin. I think we have to treat them all fairly and give them equitable access to our launch pads and to our licensing. And by doing that, I think you're going to see again, a lot of companies catch where Elon's at with SpaceX. And again, that's a good thing for the market.
Secretary Duffy, always good to talk to you. We really appreciate you joining us. Hope to see you in the
thanks,
skies and maybe on the ground. And we think of him as airplanes, but then you got to think we didn't get to talk robo taxis and everything else. You could go that way with him. There's so many things going on. Thank you, sir. When we come back, a lot more on Squawk Box and some big numbers coming up at 8:30 that could move the market. Don't go anywhere. Welcome back to Squawk Box. OpenAI turning up the heat for competitors in the very lucrative market for these folks. Mackenzie, let's join us with more. What's happening? How much money can people even spend for these people anymore?
Quite a lot, as we're seeing with all these new valuations coming in every other day now. But Sam Altman, he really turned OpenAI into a cultural force with ChatGPT, but now he's chasing enterprise, which is where the real money is. GPT-5 is at the center of that push. So yes, the rollout was messy, but the upgrade was never really about the average user. It's meant for high-ticket corporate buyers, the ones who have long relied on Anthropic for their coding needs. Now, a source familiar with internal data says that since launch, API usage has more than doubled. It's handling twice as much coding and agent building work, with reasoning use cases up 8-fold. Now, startups like Cursor and Versal have made GPT-5 the default in certain products and workflows, especially for tasks like code generation and front-end design. Now, several told me that it's fast to integrate, more reliable on complex steps, and dramatically cheaper than the alternatives. You got GPT-5 costing up to 7.5 times less than Claude for some enterprise workloads, which is certainly enough to rethink old loyalties. And that momentum puts pressure on Anthropic, which gets 80% of its revenue from businesses. Anthropic, though, still scaling fast in enterprise, with that revenue up 17x year over year, thanks to massive multi-product deals with names like Amazon. Andrew?
You know, we heard about the Cursor piece of this, obviously on the enterprise side for coding, now moving from being, really based on Anthropic, is going to move to ChatGPT-5. But now you hear a lot of folks on X and other places saying, well, we don't think ChatGPT 5 is as good as we thought it was going to be. Is there second guessing going on here?
Well, what was fascinating is Cursor, as you said, one of Anthropic's big customers, they still have an ongoing revenue agreement, and it's still the default for existing customers. It's just that new users to the platform will have GPT-5 as a default. But the fact that the CEO got on stage during OpenAI's live stream calling GPT-5 the smartest coding model we've ever tried, that's certainly a big symbolic gesture here. But to your point, what's fascinating is that actually a lot of the upgrades that got this blowback on the consumer-facing side, the chatbot-facing side, are precisely the features that make it better for coders. Things that are developer tasks like debugging, code generation, interface design, multi-step planning. That's all a product of some of these architectural shifts. But on the consumer-facing side, it's just clunkier.
Kenzie, I want to thank you. Thank you for waking up early, too. Appreciate it.
But coming up, House Minority Leader Hakeem Jeffries on everything from the state of the Democratic Party to the race for mayor in New York City. That's at 8:10 Eastern Time. Squawk Box coming right back. Coming up, Apple in rally mode. Shares of the iPhone maker up more than 12% in August. Take a look at that latest move and some other tech names that you can watch. Squawk Box coming right back. Just before 8 a.m. on the East Coast, you're watching Squawk Box on CNBC. I'm Joe Kernan along with Andrew Ross Sorkin. And
Big hour.
it is a big hour. We have
8:30.
one of the leaders.
Be there,
of,
be square.
Yeah, one of the leaders of.
Hakeem Jeffrey is also big.
Minority leader. And who else we got? We got BPI.
I'm saying numbers.
Oh, you're talking about.
I was talking numbers.
Don't discount the leader.
No, we got a lot going on.
We do. There's the expected range that you saw. Also, we are in the green now after some new highs set on two of those, the S&P and the Nasdaq. Dow Jones playing catch up a little bit. Catch up. It's the two tomatoes following their mother. They're lagging behind. He says catch up. Go ahead.
I want to get over to Frank Holland with a look at this morning's pre-market movers. Frank, laugh at Joe's jokes, please.
Yeah, joke, Frank.
It was pretty funny. It was pretty funny. You got to give Joe a little something. But right now, we're going to give you your earnings movers. We're going to go back to Cisco. We hit this earlier. Now Cisco hitting its lows this morning, down about 1.25%. This is following beats across the board in fiscal Q4. Full year was largely in line. We're talking about guidance. But Piper Sandler out with a note this morning saying that guidance was actually below what the bulls were hoping to see. CEO Chuck Robbins touting the company's AI infrastructure orders as double the original target for fiscal 2025. Again, shares down about 1.33%. Be sure to join us at 9:15 a.m. Eastern on Squawk on the Street, where CEO Chuck Robbins is going to be there to talk the quarter, AI, tariffs, I'm sure just about everything. All right, moving on. AMD shares, they're in the red this morning despite being named to B of A's US 1 list. It's this list of best investment ideas. Take a look. AMD pulling back about 0.75% and now joins names like Walmart, Goldman Sachs, and of course its biggest competitor, NVIDIA, which has been on that same list since June. Marriott was actually removed from the list. Again, shares of AMD down, well now just about 1%, but year to date up just about 30%. We're also finishing off with a check of yesterday's huge IPO. Of course, that's bullish, the owner of CoinDesk, surging in the pre-market. Right now you see shares are up over 13% in the pre-market, but still below the highs that it hit right after it began trading. It's still more than double its IPO price of $37, which is already above its expected range of 32 to 33 a share. That offering was also upsized from slightly more than 20 million to 30 million shares, and it's just the latest in a slew of companies that have surged after going public. We're talking names like Circle and Corey. Take a look at this chart though. Huge surge after it went public, moved down a bit, but still right now you can see shares are up just about 13.5%. Joe, back over to you.
All right, Frank, thanks. Apple shares have been picking up some steam. In August, up nearly 13%. The company reportedly beefing up its AI offerings with new consumer devices. Join us now, Tony Wong, T. Rowe Price portfolio manager. Did you ever waffle, Tony? Did you ever think, wow, this is different this time for Apple when it was pulling back a little bit? That's always been a mistake.
Yeah, I think that at the end of the day, you have to, think that Apple is still the ecosystem provider. Everyone is still using iPhones. As long as people aren't leaving the ecosystem, it continues to have a lot of optionality. And I think, they don't have to be first to market, and often they aren't, but they often refine the product and deliver a really good experience. So I think that's what Apple's trying to do here.
One of the things that you mentioned is the cost of intelligence is basically going to zero. That if it costs nothing, how do you make money? What's the implication for all these companies then?
Yeah, I think that's what is going to be really interesting is that the cost of intelligence, I think, is going to zero. When you think about what you need to hire a bunch of technical engineers or a lot of salespeople, now can be done with agents and vibe coding. And so I think that's going to be a big change here is that, the existing companies need to retool their business models, and it's going to create a lot of new entrants. You're seeing that in the private markets, a lot of new software companies, and I think going forward, it's going to expand a lot of creativity. It's going to be the best idea wins. And so I think it's going to be an exciting new kind of innovation cycle that we're heading into.
So Apple's got a lot going for it. You figure it'll be okay in terms of AI, even if it's a little behind. Who's ahead right now? We have that discussion a lot, and there's a piece in the Journal today that a little bit of, I guess, disappointment about GPT-5 and others. What's your favorite?
Yeah, I think Apple still has a play here. I think they can do a lot, in terms of, potentially partnerships, M&A. They said they were more open to that, I think, on the last call. And they have a lot of capital to deploy here and ability to integrate into their products. And so I think that they still have a lot of ways to deliver really premium experiences on the AI front. In terms of who I think is leading, I think that ChatGPT is really, kind of breaking away from the pack in terms of usage, the personalized experience, the amount of capital they're raising. But it's going to be, there's going to be multiple models that I think that do well. I think Anthropic on the coding side. So I don't think that's going to be one model rule them all. But in terms of like consumer engagement, definitely ChatGPT is like off the charts here.
So if consumer products come from all this AI, is Apple in a position to lead as well for, I don't know, home security AI robots? Whatever you can come up with, I figure Tim Cook is probably thinking about it.
Yeah, well, what's exciting about this AI space race is that, I think about it as the space race is going to multiple moons. It's not just one use case. So you think about robotics, I think Tesla is going to that one, and autonomous driving. I think Apple's really, more focused on delivering personal premium experiences on the kind of, iPhone side, remote computing side. And I think that they have a lot of different TAMs they can go into, but they don't have to go into autonomous driving, for example. And they have a big opportunity within, personal computing. So I think about it as like a lot of different avenues, a lot of different swim lanes. And that's what's exciting, I think, about each of these large companies, that they can roll out AI to their consumer base.
Okay. Tony, thank you. We're going to end it there. We have the leader of the Minority Leader Jeffries waiting, so we're going to head there next, I think.
You bet.
Thanks.
Coming up, House Minority Leader Hakeem Jeffries on the state of the Democratic Party, the president's handling of the economy, and so much more. And then at 8:30 this morning, another piece of inflation data. We're going to get it. The July Producer Price Index is going to be out along with jobless claims. Stay tuned. You're watching Squawk Box on CNBC. to Squawk Box. Join us right now, House Minority Leader Hakeem Jeffries. There is so much to talk to you about this morning, about everything that's going on in Washington, about the BLS, the Fed. We could talk about NVIDIA, Democratic Party, but I want to start with this. And by the way, mea culpa on me too, but I'm curious where you land. For the last several months, the Democratic Party, for the most part, has been publicly suggesting that because of these tariffs, that the economy was going to falter, that there was going to be a massive recession. And for whatever reason, that has not happened. And I'm curious why you think that hasn't happened, and whether you think it was a mistake to be as critical as you have been.
Well, good morning. Great to be with you. Donald Trump promised on day one that costs were going to go down. Costs haven't gone down. They've gone up. What we have seen, in fact, is job creation go down almost to record low levels. And so there is reason to believe that the economy is not moving in the right direction. The erratic tariff policies have created a great deal of uncertainty in the business environment, and uncertainty, of course, doesn't allow for the type of explosive economic growth that we will all like to see here in the United States of America. I think there's no real basis to conclude that Donald Trump has been successful, particularly as it relates to the core issue of driving down the high cost of living in the United States of America, which is too high, which was his fundamental promise to the American people. Costs aren't going down, they're going up.
But are you surprised? I'm just asking, just as a person, are you surprised that the tariffs haven't had a bigger impact on prices, for example?
I think it remains to be seen where this is headed. I'm deeply concerned that the tariffs are going to exacerbate the inflationary challenges that we already have in the United States of America, the affordability issues that we have in the United States of America, particularly as it relates to consumer goods, and consumer goods that are going to be important to the American people as folks prepare to send their children back to school.
Mr. Speaker, I don't know about deflation and costs coming down. All I can tell you is that the inflation rate itself was 2.7% in the most recent read year over year, versus it got to a high of 9% under Biden. Stocks are at record highs. Unemployment is 4.2%. That's full employment. The GDP was 3%. The border is actually secure. We've got trade deals with EU, Japan, many more in the works, and trillions of dollars of foreign investment coming here. Iran's nuclear ambitions have been set back indefinitely. And I just wrote down a few things. So I just have to ask you, where is the calamity that you're talking about? And it almost seems like for Democrats, socialism is the answer to these problems, or I don't know, what, an end of democracy or something. We just don't get it.
Well, actually, I'll tell you what we stand for, Joe. It's pretty clear. As Democrats, we believe in a strong floor and no ceiling. In America, you work hard, you play by the rules. You should be able to live the good life. And there should be no ceiling on your success, on your capacity to do anything in the United States of America. That's the great promise of this country. At the same period of time, there should be a strong floor. Today is the 90th anniversary of Social Security. It was born 90 years ago today. What we've seen from this administration is an attack on Social Security, an attack on Medicare, an attack on the Affordable Care Act, ripping Medicaid away from millions of Americans. That actually is the type of strong floor that we should also have in this country. You pass one big ugly bill that's now law on a partisan basis that represents the largest attack on healthcare in American history. Hospitals will close, nursing homes will shut down, community-based health clinics will be unable to operate. People all across the country are going to experience increased premiums, co-pays, and prescription drug prices. That's a problem for everyday Americans. I'm not talking about people who are already wealthy and well off and well connected. I'm talking about the everyday Americans that I represent in Brooklyn and that we're fighting hard for. In fact, those same Americans, food is being ripped out of the mouths of hungry children, veterans, and seniors, with the largest attack on nutritional assistance in American history. I find that problematic. in the United States of America, and millions of people do so as well.
Leader, where do you land on this mayoral race in New York, and in particular on Mamdani, who is clearly now the front runner in this situation, won the primary? You have not publicly come out endorsed him yet, and I'm curious what you're thinking.
Well, he ran a strong race in the primary, obviously, relentlessly focused on affordability, which is a big problem, of course, here in New York City, along with every other part of the United States of America. And he outworked the opposition, he outmessaged the opposition, and outorganized the opposition. But now during the general election, of course, he's going to have to demonstrate to a broader electorate, including in many of the neighborhoods that I represent in Brooklyn, that his ideas can actually be put into reality. And that's, you know, the conversation that he's having with me and having with people who are community leaders and residents in the 8th Congressional District I serve.
And that sounds like you're not convinced then yet.
No, well, we had one initial conversation. It was a constructive and candid conversation. It was centered around the community. And in that conversation, he indicated he'd like my help in putting together additional meetings with members of the congressional delegation, as well as leaders in many of the communities that I represent in neighborhoods like East New York and Brownsville, Canarsie, some of the more lower income working class neighborhoods that I may serve. I agreed to do that. That meeting is being put into motion right now.
How do you think about him relative to Cuomo? And how do you think about the message of socialism, or being a socialist, and what that may portend for the Democratic Party?
Well, I think, as I indicated, listen, my view about what we as Democrats stand for, what we're fighting for, we need to lower the high cost of living in the United States of America. We need to fix our broken healthcare system, and we need to clean up corruption in Washington, D.C., so we actually have a government that works for the American people, for everyday Americans, for hardworking American taxpayers, as opposed to working for the privileged few. That's what that one big ugly bill was about. Cut healthcare, devastate nutritional assistance, reward Republican billionaire donors with massive tax breaks. That's not us as Democrats. Here in this country, work hard, play by the rules. You should be able to afford to live the good life. Good paying job, good housing, good healthcare, good education for your children,
right,
and a good retirement, which, by the way, means protect Social Security and Medicare, because they are earned benefits, not entitlement programs. Don't try to devastate
I understand
them,
that.
which is
I'm
what
just
the
curious
Republican plan is right now.
I'm curious where you land on things like, freezing rent, free buses, giving away, free food at supermarkets and the like, and what you just think of that idea and what it represents.
Listen, Zoran is going to have to make the case to the people of New York City, including in the neighborhoods that I represent, that these ideas, which are designed to address affordability in New York City, and that as a top line effort is important. The cost of living is the #1 issue here in the city, #1 issue across the country. It's why Donald Trump's poll numbers are in the basement right now.
But do you agree with those
he's gonna have to
approaches
defend
as a solution? Look, you and I agree. Affordability is this #1 issue in New York, is the #1 issue in the country. And so he has done a great job of identifying that issue and articulating that issue. The question is how you attack that issue. And what I'm asking you is whether you agree with the solutions that he's offering.
Here's what my solution would be. And I've said this directly to him, and will continue to say it to policymakers across the city, the state, and the country. We have a situation in New York City and across America where the demand for housing that is affordable greatly exceeds the supply. That's a problem. That imbalance is jamming people up. Working class residents, moderate income residents, middle class residents. In New York City, if you're a police officer married to a nurse, you can't even afford to purchase a home in this city. That's problematic. So we have to build our way out of this problem. That's all hands on deck. that's city, that's state, that's federal. That also means a meaningful partnership with the private sector. That has always been my position. That will continue to be my position because it's the right position for the people that I serve.
Andrew Cuomo has made the point that Zoran Mandami lives in a rent control department, even though he is not considered quote unquote poor, and that Andrew Cuomo would actually try to create a law in the state that would prevent people like Mandami from being from living in a rent control department. Do you think that he should live in a rent control department?
Well, listen, that's an issue for the state legislators and the state government to work out.
No, but it's a fascinating issue about affordability in this city, and whether there are folks who are living in rent control departments all across this city that effectively should be going towards poor people who need that affordability.
It's a legitimate issue that has been raised, and the Mandami campaign is going to have to address it.
Talking about issues that folks are going to have to address, what do you think of the president's decision to replace the BLS director in terms of this new person who's just been put into this role?
I think it's a disgrace, but it's part of a consistent pattern that the Trump administration has attacked the free enterprise system here in the United States of America. The Trump administration has unleashed the largest pay-to-play scheme in modern American history, and everybody in corporate America knows it. Everyone in Washington, D.C. knows it. Is that not an attack on a free market-based economy here in the United States of America? Seems to me that it actually is. That's problematic.
Right, but here's the thing: you're talking about a free market. This is why I wanted to go there, because there's you're talking about a free market on one side and being an advocate for a free market on one side, but at the same time, we just had a whole conversation about an individual who's running for mayor in New York City who is genuinely titling themselves a socialist. And you're saying that you might ultimately support them. And so I'm trying to understand the distinction here.
No. I'm trying to understand why you would spend a significant amount of time asking me about the Democratic nominee who's not even the mayor, and it's not a legitimate point to raise about a president who is regularly attacking the free market economy, bullying corporations, bullying universities, bullying law firms. He just recently called upon the CEO of Goldman Sachs to fire their chief economist. That's not problematic. He's the leader of the free world, the president of the United States of America. He's in office right now, and he's attacking the market-based economy. Now, I said that I support.
I don't disagree with you at all. And I don't love those attacks, but I will say, just in fairness, and I wonder whether you think that they're the same or they're not the same. There have been people that have criticized Elizabeth Warren for years for individually attacking and going after and naming specific CEOs in America, specific companies in America, over again and over again. President Biden famously didn't invite Elon Musk to the White House, probably caused him to actually support this president originally. And so the question is whether those are the same or they're different.
It's interesting that we're talking about Joe Biden, no longer the president, Elizabeth Warren, who's a senator, as opposed to Donald Trump, the president of the United States of America, his administration, as well as complete control of government in Washington, D.C., the House and the Senate. That's the problem that we are confronting right now. And our challenge is to actually make sure that we are addressing the issues of significance to the American people. And the number one issue is the high cost of living that they failed to address.
Final question. I think there are a lot of Republicans who actually agree that there are certain things this president does that they don't like, but they're unwilling to stand up and raise their hand and say something about it. Why do you think that is?
I mean, we're dealing with a cult-like situation, unfortunately, in Washington, D.C., and we as Democrats will repeatedly make the point, look, we are a separate and co-equal branch of government. We don't work for Donald Trump. We don't work for Elon Musk. We don't work for J.D. Vance. We work for the American people. And unfortunately, far too many of my Republican colleagues have not taken that approach. They are actively doing damage to the people they represent, including the largest attack on Medicaid in American history. And they're going to pay a price for that at the polls in November of next year.
Leader, I want to thank you for joining us. Always great to talk to you. We love hearing your perspective, and we appreciate it. Thank you.
Thank you.
Still to come, a read on wholesale prices and whether or not consumer costs are likely to rise. That's the July PPI data out in just a few minutes. And the futures ahead of the numbers. You see, that would be new highs in the S&P and the NASDAQ. Continuing new highs, all-time highs. Futures, you can see, fairly positive, right around flat line before this number. We'll be right back. Couple of minutes away now from producer price index, also jobless claims. The futures are flat on the session, although we have seen rates moderate just a little bit. Last time we looked at like 420 now or so on the 10-year. We'll take a look. See if I can confirm that. 4.206. We have seen Bitcoin rally to new highs, and it's pulling back just a little bit this morning. Rick Santelli is standing by at the CME in Chicago. It'd be good to talk to him. And Rick, you can just fill us in on what the PPI includes, what it doesn't include, how it differs from the CPI, whether you see different impacts of tariffs and on import prices. It looks at different things.
Yeah, I know, and there's a whole host of new vernacular and terminology we're all becoming so comfortable with. factory gate prices. So what we're going to be watching is, when it comes out of the factory, before anybody really touches it or does anything, we want to see what those markups are, how that effect is on the producer side with regard to pricing. So that's very important versus the end result on the consumer after it passes through a number of various entities. So on this part of the early form of production, it gives us an idea what might be in the pipeline for future pricing pressures. And even though it's been very sticky on both CPI, PCE, producer price index, ultimately what the stickiness is caused by is where the debate lies. Is it going to strictly be tariffs? Do remember, if a price goes up and then it's steady, there's no inflation after the initial jump. That's the way the numbers are calculated. It's the rate of change. So we got to be very careful how we look at some of these numbers. We're a couple seconds away, folks, from our July release of the Producer Price Index. Headline number is whoppingly big. Oh my goodness. Up 0.9%. Up 0.9. And if you strip out food and energy, guess what? It's still up 0.9. Boy, that equals June of 22. You're to March of 22 on the headline to find a bigger number. On the core number, that would comp to March of 22, since we've had a number of that magnitude when it was 1.2%. These are kind of COVID distorted numbers. Now, let's look at ex-food, energy, and trade. Triple the expectations. All three of those were expected to be up 0.2. This is up 0.6. 0.6 would be the highest level since March of 22 when it was 0.9. Now, let's go year over year. These are warm too. 3.7, excuse me, I'm getting ahead of myself. Final demand year over year is 3.3. We're expecting 2.5. Now 3.3, that would be the highest since February. The high water mark was January this year at 3.8. Now 2.8 is X food, energy, and trade. That is definitely higher than 2.5 expected. 2.8 will be the highest since March. And right in the middle there, we have X just food and energy. That number coming in at 3.7. I kept it for last because that really is a very, very large number. 3.7, well, that would be the largest since March when it was 3.9. So we see every single metric is warmer than expected. Every single metric is significantly higher sequentially. Now let's go to initial jobless claims. Here's a bit of good news, 224,000. That's down 3,000 from a slightly revised 227. And we're the 12th consecutive week above 1.9 million. And continuing claims, 1,953,000. Once again, it all gets stacked up pretty tight. What we're thinking about is these numbers go all the way back to November of 2021, and the next jump up from these numbers will be when we pop over 2 million. The last time we did that was, as I said, Nova 21, 2,041,000. So we saw interest rates move up to this kind of 4.25 level in 10s. The 2-year has moved up to a bit to 370, and every maturity now, except for 30-year bonds, are higher in yield. 30-year bonds are virtually unchanged. Next week on Wednesday, we get a 20-year, but on the supply side, it's a bit in the rearview mirror. We didn't have terrific auctions, and I'm going to throw it back to you guys. I'm a little surprised the markets haven't moved more on it, but the knee-jerk is usually against expectations. The residual trade down the road here today will be about how this factors into the bigger picture.
No kidding. The 10-year, that's not it. But the 2 years, Sorka, what day is it? Thursday?
Thursday the 14th.
How's your institutional memory?
Lousy.
It is. It's horrible. I can tell you what we talked about on Monday. We went from total inflation phobia to where, and you were uncomfortable. We talked about.
Yeah, I remember.
We flipped. We were at 180 degrees. Even yesterday or 2 days ago after the CPI. How did it happen now, Steve? Why would it be reflected in this number? And give me the Fed futures too, because we're
calculating them as we
speak. It's the 16th and 17th is when the Fed meets next month, right?
Yeah.
So we'll have another jobs number,
right,
and we'll have another PPI CPI read before then, I think too. But does this throw things off?
Absolutely, it does, because Rick ended his discussion by saying we'll have to see how all this fits into the big picture. I see that as being essentially, we have to see how this fits into the PCE. We get parts of
So
the
we don't know?
PC. It's being calculated now as we speak, Joe. You don't pay for the express service. You only pay for the, anyway, the point is that parts of the PC are calculated from CPI. Other parts come from PPI because it's thought to be better data. That's why the Fed likes the PCE, because it takes the best data from both, and we don't know. What we do know is that the PPI coming in hotter than expected likely means that this PCE will be hotter than expected. But I want to actually make Rick's point for him. My point all along has been there is no immaculate taxation. Somebody's going to pay.
Right.
Prices are going to go up.
Right.
But that doesn't change the important point that Rick made. Just because you have a one-time price increase doesn't mean you have an inflation problem. This, Joe, is exactly what the economists thought was going to happen. Okay? You were going to have three people along the way: your exporters, your importers, and your retailers. Somebody was going to pay it somewhere along the way. It has to show up somewhere. The U.S. Treasury, I don't mean to be so excited about this, is not collecting $29 billion of tariffs that no one is paying. Somebody's paying it, and now we're seeing that there's some increase in prices here.
$29 billion of future tax collections.
Yeah, it's fine, but the point is that
the government needs to spend all this money. You had the House Minority Leader on. Maybe this money could help pay for some of those things. They're going to get us in the wallet one way or the
Rick,
other.
then you should be out there telling the president he shouldn't be sending this out as some kind of dividend, which he talks about.
Well, you know what? We should tell that to everybody in Congress, all 537, including the president, the vice president, because that's what everybody does. You know, that's why the distortions of when you lower taxes, they say, oh my God, it's going to create bigger deficits. Only because they overspend their savings. They all do it, Andrew. I agree with you. They all do it.
Did you get claims, Rick? I can't seem to find claims. Oh, I just called it a whole
Yeah, claims are 224,000. Yeah,
Down
very
3.
well behaved. 1,953,000.
There's a whole
12th
other
consecutive
debate.
week over 1.9. Yeah.
There's a whole other debate. Maybe we'll have it
Healthy.
tomorrow about what's going on in the jobs market. Are jobs healthy or solid, as some officials say? Is it a sign of worry what's going on? It's a different debate.
You got Fed futures yet?
Yeah, I do. I have it down a bit, but I'm asking my producer to calculate it one more time. I have it at 93, down from 100, essentially. So it came down a little bit for September, came down a little bit more for December, and they priced for October, and they priced out right now at 44%, the third cut.
Right.
So that's where that's what we're thinking right now.
Rick, I didn't even try with Leader Jeffries. He wants, he's mad because prices aren't actually coming down. But failing to say that they went up to these levels because of 40-year highs and inflation of 9%. And now they're here and they're only rising, whatever, 2.7 2 days ago, higher in this number, but they're never coming down unless there's a recession, right? We don't want.
No, it's the compounding nature. It's the compounding
So what are they talking
nature.
about?
Yeah, I don't know. You know, every a month when I do CPI, I always give the actual indices that go back, you know, over 100 years. On one of them, not on the seasonally adjusted, and both of them every month are pretty much at all-time highs. So you're right. We may go sideways some months. We may even have small downturns, but for the most part, what everybody watching hates about pricing is the fact that it compounds like compounded interest, and even when it shuts itself down, yes, going down is a whole new ball game that we never talk about, that the Fed isn't even concerned about. The Fed doesn't care if prices really go down. They just want them to stop going up.
Hey, can I just make a point? There's an anomaly in the data here from what I thought was going to happen. I thought what was going to happen was this area called trade services, it's a measure of profit margins, would squeeze and actually exert downward pressure on wholesale prices. I think that was an expectation across the street. But these are big numbers. Trade of private capital up 4.5%. Trade of personal consumption goods, the margins that they're making, all of them up big. And I don't quite understand why the government is saying that profit margins increased when we're not seeing essentially a lot of inflation in the consumer prices, but we're seeing prices higher on the wholesale prices. that should compress margins. And we've had a whole bunch of companies come on and say, we're taking big hits because of these tariffs. So this number should be going the other way. I'm not sure what's happening here, but Rick has also reported, and it's worth saying, even if you take these trade services out, the PPI was hot anyway, but this should have exerted some downward pressure, and it didn't. Real quickly, I'll be asking St. Louis Fed President Alberto Musalem about these numbers and much more later this morning at 10 a.m.
Right. Thank you, Rick and Steve. Now what? Oh, Andrew, we have a panel.
We do. You ready for this? Kitty Richards, former Treasury Department official in the Biden administration. Also, Josh Rua, Stanford Graduate School of Business professor. Good morning to both of you. You've been listening to this debate. You've seen these numbers. Kitty, I'll start with you. What do you do about it if you're the Fed?
I think that the Fed is going to have a difficult time meeting those investor expectations of a rate cut. I actually want to focus on what we were just talking about, this difference between the CPI, which is only starting to warm up, and the producer price index, which just came in very hot. And part of what's going on there is that there is a bit of a timing mismatch between when consumer prices rise and when producer prices rise. So I think that the Fed is going to look at this and that CPE release that's going to come later in the month and say, ooh, we're not really sure what's going on, but it looks like there are going to be price hikes coming down the pike. I'm actually not surprised that we didn't see compression of corporate profits. That's something that's characterized the inflationary period since the beginning of the pandemic, that corporations are actually able to protect their profit margins and actually even increase their profit margins at times using inflation and uncertainty as cover for price hikes, even if their costs aren't going up. And so one of the things we're going to be looking for in the CPI as consumer prices are starting to rise is, are corporations actually taking hits, or are they able to use this moment of supply constraint created by tariffs and uncertainty created by the Trump administration to pass on higher prices even above their increased costs?
Josh, what do you say?
Well, it's a toasty number, Andrew, but I think this PPI index is pretty volatile. I don't think you can read too much into this. One thing I noticed that we haven't mentioned yet is that the services component is actually up more strongly than the goods component. And if you're thinking it could be about tariffs, but you expect to see more in goods. So I think it generally reflects possibly somewhat hotter demand than we had thought. It may slightly temper what the Fed would be thinking for the September meeting, but not by too much. And I also would want to underscore what you were discussing before, which is that the Fed should not be responding to price changes that would be driven by tariffs. I'm not seeing, I mean, for the CPI, you had to squint real hard to see evidence of tariffs in there. On this PPI as well, you know, I think we gotta digest the numbers. I'm not seeing it yet. So in any case, I think it's a volatile index. I think we're gonna have to wait and see what comes out with the PCE and the jobs numbers in early September, of course.
Well, here's the other question, Josh. Do you think that all of a sudden these numbers come this September are going to be politicized?
Well, I think people may be discussing that, but it remains to be seen. You know what's going to happen there with the BLS. I don't think we're entering a new era of politicized economic statistics. I think that including the current nominee, E.J. Antony, you know, I don't think the issue with him, in my opinion, is that he would politicize the numbers. In fact, he's criticized the BLS on very valid grounds. And Secretary Besson was right when he said we can expect better from our statistical agencies. What I do think about E.J. Antony is that some of his statistical analyses are not of the highest quality. I'd like to see somebody really high quality in that job, like maybe somebody from Silicon Valley, where I'm from here.
We got to run. Kitty, you want to, final 20 seconds to you?
I think that investors should really be concerned about A.J. Antony, and we're seeing economists across the political spectrum, including folks from the American Enterprise Institute and other more right-leaning think tanks here in Washington, voicing the same concerns that he's not a high-quality candidate, and he is in the tank for Donald Trump's desire to have numbers that support his political agenda. And I think that's really, really troubling because the investors who watch this show, for example, rely on this data being accurate and timely and not being manipulated so that they can make good decisions about where to invest. And it should be really troubling to folks that we're seeing the politicization of our data gathering agencies. My hope is that those concerns are shared by enough members in the Senate, in the Republican Party, and that they are able to stand up to Donald Trump on this issue. Otherwise, I think that we're going to see more moves like this.
Kitty and Josh, want to thank you both. Appreciate it. Coming up next, investors, they are seeing a deer in the headlights, that is, plus Centers for Medicare and Medicaid Service Administrator Dr. Mehmet Oz. He's going to join us. We got a lot to talk to him about as well. Don't go anywhere. Smart Box returns after this.
Check out the shares of Deere, head of the opening bell. The company managed to report better than expected results, but the shares are down, as you can see, significantly down 6.5% after it narrowed its full year profit guidance. We are going to go back to break quickly, and when we come back, we will have Dr. Mehmet Oz, the administrator for Medicare and Medicaid Services. Stay with us. Joining us now, Dr. Mehmet Oz, the administrator of the Centers for Medicare and Medicaid Services. Doctor, it is good to see you, and welcome. It's so tough to try to navigate through these challenges, and I don't envy the job you're trying to do. So, by definition, we think that some government programs are wasteful. There's no doubt about it. At the same time, nobody likes to hear that something's not going to be covered or that authorizations are going to be tightened up. How do you walk the fine line? And you're trying to do it right now with Medicare. We've all heard AI is going to help us do all these different things, but when you try to use AI to maybe get rid of some unnecessary procedures, you're immediately going to hear people crying that it's unfair and we don't need this, and that's what you're going through right now.
Joe, the challenge is worth it. Now think about prior authorization, which is the large category you're speaking about, as a tool. And when done correctly, it's incredibly helpful. You have a hammer, which is a tool, you can build a house with it, but you can do damage with it as well. And when prior authorization first started being used within Medicare and Medicaid, that was 60 years ago. By the way, the program's 60 years old this month, so it's got a long and wonderful history of helping Americans achieve their best health. And that's really the goal here. It's not just an insurance card, but to allow you to flourish, to thrive with the best health possible. You can't be a wealthy nation without being a healthy nation. But we need to make sure that the money's spent in the right places. So when you go to a checkout counter, you put your debit card in, you immediately are told whether you have money in the bank so that the vendor knows that they're getting paid and that you can actually pay for it. We need something equivalent to that with prior authorization. That's not what's happening now. For private insurance companies and for Medicare Advantage, oftentimes these programs are used as weapons to deprive care. It's done for a variety of reasons, but if we could make it work the way it's supposed to work, to allow us to adjudicate for sure that you're getting the right care in the right place, you're not having some unscrupulous individual doing an unnecessary procedure or giving you an unneeded medication, that's a helpful thing for the system. We think it could actually be about $100 billion of benefit to the American people, to the taxpayer, if we can use these services appropriately. So the president used the power to convene, as he often does. He realizes you can be nimble if you can get industry to start doing the right thing. So he asked us to pull together the insurance companies in America. We got about roughly 80% of the people in America's insurance companies now pledging to do something with prior authorization. They announced it at the HHS headquarters with Secretary Kennedy and myself. We had members of Congress there, and they have vowed, by the end of this calendar year, they will reduce the number of procedures for which prior authorization is required, only the ones that are most important. They're going to be very clear on what the criteria are for getting these procedures or these medications, and by next year, they'll do it digitally. So just like that debit card goes in and tells you immediately, not in 2 weeks, right that moment, whether you have money to buy that cappuccino, we'll be able to do the same thing for the American people.
Well, it's going to be demagogued. It already is. I'm reading it already. We don't need a duplicative process. It's just going to result in less care being given to people that need it, and which brings us to Medicaid. We just had Leader Jeffries on. I mean, the way Democrats talk about what was in that bill and the way Republicans talk about it, it almost seems like you're in a parallel or a different universe. They think Medicaid is being absolutely gutted. I mean, how do you respond to that? You need work requirements. Is the spending still going up over the next 10 years? Is it not by trillions of dollars?
Joe, we're going to spend $200 billion more on Medicaid.
$200 billion, okay.
$200 billion more on Medicaid. And we have a program that had grown the Medicaid program 50% in its size in the last 5 years. So it's reprehensible to criticize the president on this, I think, very earnest effort to save Medicaid, to allow it to provide care to our most vulnerable. But you cannot use it in ways it was not designed. 60 years ago, when Medicaid was created, it was very clear it was supposed to be used for those at the dawn of their life, as Hubert Humphrey said, the children, those at the twilight of their life, the elderly, and those who were living in the shadows, the disabled. Those are the folks it was designed for. So every Democratic president and every Republican president has said that the backbone of a social support fabric has to be work. You want people to actually get out of their homes and go do things. An able-bodied person on Medicaid today watches about 6.1 hours of television or just hangs out leisure time. This is data that is well replicated. That's a lot of time. No one's going to be happy sitting at home 6.1 hours a day doing nothing. Your desire to go out and do something to change the world is given to you by God the moment you're born. We want people to go out there and live their fullest lives. So asking people to go out and either volunteer at a position, get educated, get engaged with your community, or go get a job, and we're going to help you do that. We already have 2 trials ongoing with technology solutions to allow us to pretty quickly adjudicate whether you've tried the work. If you have not had a job, we can try to connect you with the state employment offices. We can adjudicate whether you're trying to volunteer or get educated. Just go out and change the world. This is something everyone should be rooting for. I don't understand how you could possibly say that's a bad thing for America, for us not to want to get people to be wealthy, to go out there and change their own lives for the better.
It seems to be real concern about rural hospitals. Can you allay some of those fears, doctor, and the effect? What is the fear, and how do you counter? How do you tell people it's going to be okay?
Well, the quality of the care you're getting in healthcare, especially, but the dignity you have is oftentimes driven, unfortunately, by the zip code you live in. So about 7% of the Medicaid dollars we spoke of go to rural healthcare. It's about $20 billion a year. The president and the Congress have very wisely said we're going to put $10 billion more a year into this program for the next 5 years. So 50% increased spending in rural healthcare, and they've created a Rural Health Transformation Fund that the Centers for Medicare and Medicaid Services is going to administer. Okay. The money is going to be given with grants, which are being requested within the next month. By the end of this calendar year, we're going to put money into the rural healthcare system to make sure that it works better for everybody. Better manpower, right-sizing the system, and bringing IT into the program. We need technology.
I'm glad you know how TV works, because you wrapped just in time, doctor. Yeah, we got to get out. Thank you. Dr. Oz, Squawk on the Street is coming right after a break.
Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer here at Post 9 of the New York Stock Exchange. Faber has the morning off. Futures take a bit of a tumble as July PPI is a barn burner. Biggest monthly jump on headline and core in over 3 years. Services actually track hotter than goods, but the 10-year still below 4.25. Our roadmap begins with the future for rates. Fed officials weighing in as the Treasury Secretary does suggest a half-point cut. AI demand fueling Cisco's quarterly beat. Chuck Robbins going to be with us in a few moments. And then Deere shares under some pressure. The company trims the high end of its full-year guidance. PPI, though, is the story of the morning as we watch the market reaction here. Jim, short end is higher this morning, but people are looking at portfolio management, some of the inputs that sometimes move this number.
Well, I go through it, and once again, I'm now a lot more skeptical than I was after what happened in the previous one. And I look at things like, all right, machinery, I'm just going to reel off some, say tariff, no tariff. Machinery and equipment, way too hot, tariff, okay? Truck transportation and freight, bogus. There's been a freight recession. That makes no sense whatsoever. I don't know who they're even talking to. Why don't they call J.B. Hunt? Get a little information there. Diesel fuel index. How are we going to control diesel fuel? Diesel is actually going down. I don't get that one bit. And then warehouse services. Well, I mean, that's why we have robots. I mean, so give me a break. The ones that are really bad are going to get better, which is one of the reasons why I think that the bonds are not going crazy. When they look through it, and I think people just say, where are they getting this information? And I don't think that's such a bad question to ask after what happened. Where are they getting it? When you talk about the freight recession that the trucking companies have, and you see that freight rates are up, I don't know who they're talking to. Who? There's no freight increase. There's a recession.
How do you explain the services, which, like with CPI, is not acting like an offset?
Investment services are up. Well, I mean, how is that possible unless you're talking about jamming people with private equity or something? Oh,
well, this is normally a function of asset prices, yeah?
Yeah, well, I mean, I think that's the case. You can do that. At the same time, you know, am I going to change my outlook because BlackRock is able to make a little more because they have more money under management? I just, you know, look, I didn't used to look through these things. I would just say, okay, that's the data. The data's better than my anecdotal. I no longer feel that way. I think my anecdotal is more empirical than theirs is, and I think that we're discovering the flaws in a system where many people are laid off and the different divisions are not as accurate or as good as they used to be. I think that if we were to bring someone on here in pure candor and say, how did you get that freight number? How did you get that warehouse number? I think they would say, I'm not really sure.
When did you change your mind about the veracity of the data?
I think that the whole Doge and then the firing, I think the firing was handled very poorly by the president because he was worried about looking bad in the numbers. I was worried about the numbers not being accurate. I thought that was a reason to be able to have maybe a change at the top. But I have been saying now for 2 years that this can no longer be handled by the public sector. We have the ability to model, we have algorithms, we have people that could tell us exactly what the real numbers are, and we just have to hire them. If I brought in, yes, the stock that actually reversed yesterday in criminal faction, just kidding, Palantir. I think Palantir, with its ontology, its ability to be able to figure out an organization, would have much better numbers. And I now praise Alex Karp almost the way I praise Jensen Huang, which is completely wrong, because one man is a force of good and the other one's a force of I have no idea. But I do believe Palantir could do the numbers much better.
All right, so, but you don't think the case for a 50 gets any easier?
What is the case for a 50? I mean, what? I mean, you know, guys say stuff.
You mean the Treasury Secretary?
It's okay. You know, look, he's taking his time getting rid of his stuff. He's more complex. It's like when I had my divorce, it was really complex. Okay, give me a break. You know, just sit down and figure this stuff out. Sometimes harder than you think. But I would say that I look at what's going on and I say a double is just some sort of bizarre gambit, as if that's going to somehow put a pressure on Powell, who, by the way, does not care about any of this stuff. Why? Because, not that he's not focused on the reconstruction of his office. He's focused on doing a good job, and I think he's under tremendous pressure to do even a cut. So suddenly they play the 50 basis points. It makes no sense. I mean, not with these numbers.
Right. Well, Daly certainly threw some cold water on a 50 yesterday. Bostic yesterday saying the Fed can afford to wait. Job market near full employment. Jim, claims we're still 224. Pretty good.
I think things are pretty strong. They're not great. I can make for a quarter point because the unemployment the revisions were were really bad, and I'm presuming that the revisions are more accurate than not. But I do think that most of the companies I deal with, we talked to Chuck Robbins this morning at Business Roundtable, they're kind of confused. They're kind of confused. They don't really want to add a lot of people because they're afraid that maybe AI can take the hire.
MetLife today has a chart. They reference Conference Board, but it's a chart of CEOs intending to reduce workforce over the short term and the medium term, Jim. It's like this. And MetLife's point is they're either right and the labor market's going to weaken, or they're overestimating savings from AI and those margins are going to suffer.
I don't think that's possible. I think that when we speak to Chuck Robbins at Cisco, a lot of his conference call is devoted to agentics, meaning let's not, non-humans doing the job. And I think that Chuck is not a political figure, and I think he'll just say, look, agentics are right now, and I think that therefore you have a lot of companies that are saying, why do I need as many people? So I think that there isn't anything in my mind that says that you take warehouses being up, that plenty of people in warehouses, and then you look at FedEx, which has got a gigantic warehouse in the Boston area with no people, and then you take a look at what Amazon's doing. You read how their big warehouses have no people, and then I'm supposed to conclude that the problem is warehouse employment. You need to be a little more granular than the labor department. I also don't think that they really know what a difference between a stock is and a bond, or a large company, a small company. I say that because literally I'm on all the housing, I'm on all the trucking calls. And the trucking calls are like, wow, I had no idea it was this bad. I have no idea it was bad. And it turns out that they're all wrong and trucking rates are up. No, I mean, sometimes you can look through it. Look, I read all these companies. And look, I'm not proud of it because it's taken away from a lot of my life. But at least on days like today, I have better insight than they do.
Yeah, we'll see. This is definitely top down versus bottom up. Jim mentioned Cisco, and we will talk to Chuck Robbins in a bit. Quarterly beat issues revenue guidance above forecasts. Company cites demand for AI infrastructure products. Be sure to stay tuned for our interview with Chuck in a few moments, Jim. I think their AI infrastructure orders are 2x their original target.
I thought that was terrific. Now, obviously, it's security that's the issue, not their genuine refresh for all of their switching and routing. It is certainly not their AI, which is very, very strong. The stock is down because of some words they had to say about security being disappointing. I think we have to get to the bottom of that and figure out what's going on. A lot of it is government work, and you can asterisk and say if it weren't for government work, they would do fine. But no one asterisks anything when once a stock has momentum on the downside, it's just down. But we're seeing a lot of crazy stuff. I mean, yesterday NVIDIA was down all day. I said, well, why? Well, it turns out that there was a short story out there that NVIDIA is going to be late with the next chip, which is the Vera Rubin, and that therefore the MI450 by AMD is going to be in ascendance. The story was, I'll just use a word that I think is really kind of indicative of where we are. It was a lie. It was a lie. I mean, you can look up.
Like
it's interesting. You can ChatGPT lie and Perplex lie and Gemini lie. It all comes up with the same thing, which is untruth.
Right.
It was untrue, and it caused a lot of people to buy AMD up 9 and sell NVIDIA. Now, there's probably a news story about why NVIDIA is down today, because NVIDIA is so easy to knock down right now because they're an honest company. They don't come in. And they're not a hype company. They're like, okay, what do we? They don't come in and say, what do we have to refute today? The fact is that the most major story about NVIDIA is a positive one, which is that DeepSeek can't make its so-called ballyhoo chips that it needs, and they need the H20. In the meantime, the Chinese are buying excess homes, but no, the Chinese are all powerful, and we are just
this was the tone
stooges
of
in their way.
your tweets this morning. It is
like,
true that there are reports that the Chinese government is asking some firms to buy homes. AMD,
like
by the
Lennon
way,
said, we're a bunch of useless idiots.
AMD gets added to the U.S. 1 list over at V of A. Nice profile of Lisa Su. I think it's in Wired.
No, she's fantastic. I know. I'm adding it to my Highway 66. The US 1 will go Highway 66. The Boston Post wrote that exclamation portfolio. I mean, look, AMD is good, but the idea that stock should have run yesterday off of Vera Rubin being late was just, I don't know who spreads these things.
Yeah.
I spend so much time shooting these things down. It's like, I got the call 401 saying, I finally got the call saying, here's what happened. I said, well, 3:59, the call would have been more effective because the market closes. But everyone was focused on Mr. Bullish or whatever.
Well, yeah, that was a big story yesterday, and up pre-market again today.
It was Solano.
Yeah.
Why Solano? Why did they choose Solano? You can't get Solano at Fidelity. To buy Solano at Coinbase, you have to have a picture of your driver's license. What do I need, a passport to buy Solano?
Yeah. We're gonna touch a bit more on crypto, certainly Bitcoin. Apple's had a nice run last few days as well.
Oh my!
And small caps.
Well, a lot of it's home robots.
Yeah.
I've been waiting for one for a long time.
You've been critical of Siri for as long as I can remember.
Siri, hey Siri, tell me anything.
When we come back, Cisco's Chuck Robbins will join us. We'll talk earnings and the company's AI strategy. Meantime, pre-market did lose some gains on that PPI number. We'll see how much it gets back. As we said, the long end is a little bit lower this morning. Stay with us.
Hyperscale cloud and AI investment set up for a good backdrop for Cisco, which delivered a quarterly beat and slightly better than expected guidance. We're going to go into that. Joining us now, Chairman and CEO of Chuck Robbins, on the eve, by the way, Carl, of my 12 o'clock in CNBC Investing Club meeting where we own the stock for the trust. Chuck, it's love you have you on the show, and why don't you give us a little background on the vast majority of your business that is indeed doing better than expected?
Yeah, Jim, thank you. I'm really proud of what the teams have done. We had a strong quarter. If you go back over the course of the year, we grew 5%. We grew EPS very strong. Q4 was up meaningfully, 8 and then double digits on EPS. We talked about the AI orders. If you go back a little over a year ago, we set a target of achieving $1 billion of AI orders from our web scale customers. We more than doubled that. And one of the key things that everyone wanted to know was, is it actually turning into revenue, which was confusing to me because I thought when we take orders, we actually do ship those to customers. But we did acknowledge that we recognized roughly $1 billion of AI infrastructure orders during the quarter. Our core networking was strong, and security is actually improving. I heard you talking about it earlier, and I'm sure we'll talk about it, but security is getting a lot better. So.
Well, let's go there for a second. I think there was a consensus that security was disappointing, and that if you asterisk it, though, a lot of the disappointment came in specifically with the federal government, and otherwise would have been a lot. But maybe Chuck, it's not fair to asterisk it, and that just should matter. And it wasn't as strong as you would have liked.
Yeah, I mean, you have to deal with what you can control. So a couple of data points that we gave. Number one, our overall bookings, if you take out U.S. federal, were up 10%. The rest of the world, and security, if you take out U.S. federal, was up double digits from an orders perspective. So it at least tells us that there's a broad adoption of these new technologies across our enterprise customers, our commercial customers, the service providers, and telcos, and public sector outside the United States, candidly. And so we feel good about that. We have been working hard on this new innovation. As I've talked about many times, I would say the pace of innovation that we're delivering today is probably faster than I've seen since I've been CEO and long before. And the new and refreshed security products that we have, which comprises 2/3 of the organic Cisco security portfolio, grew in excess of 20% during the quarter. Splunk's doing really well. It's just things are actually moving very much in the right direction, even though the numbers aren't quite where we want them to be yet.
Chuck, we keep looking for areas of potential friction. We keep coming back to the grid and power demand, power capacity. But is that a layer removed from the dynamic that you're inhabiting at the moment?
Yeah, we're not directly involved with those, other than trying to build silicon and products that actually consume much less energy than they have in prior generations, and we've done exactly that. That's one of the key reasons that these customers in the web scale space continue to have strong demand for our technology. Think about the large cloud providers, the 6 of them. They grew triple digits for us during the year, 4 quarters in a row of greater than 100% growth. And so this power issue they're dealing with, we're providing products that consume less power, and that's where they love the performance of our silicon.
You know, Chuck, we're trying to be able to debate here, actually all day for a lot of the different shows, about labor and how much is going to be saved. Now, Chuck, a huge theme that you had was agentics. Now, the subtext of agentics is the ability to be able to make it so that machines do what inexpensive machines do what expensive people can. You referenced it so many times that it made me feel that, Jim, get on board agentics. Is let's say the zeitgeist, the narrative, a little too behind,
so we're below second support
in the trenches?
Well, I think every customer I talk to,
third support is 460, 461.86.
What really makes Cisco unique in our ability to help our customers deliver on that is all of this real-time, low-latency communication that's going to be happening consistently between agents actually to perform these tasks. There's 2 big things it drives: low latency network capacity demand, and you have to put security into the network.
Yes, you do.
Not introduce more latency in the network by forcing this traffic through some appliance, some firewall appliance sitting somewhere. You have to put it in the network. So we're now fusing security into the network. That's the second thing.
Don't be doing that.
As it relates to labor, I think most of my peers would suggest that they do expect to be hiring fewer people if we get this right. It's early, but every rec that we have at Cisco, I'm challenging my team.
Don't challenge.
And do we need to hire that person, or can we do this with technology? And it's early, but I think that we're going to get there to where our pace of hiring over time should be slow. I don't want to get rid of a bunch of people right now. I don't want to get rid of engineers. I just want our engineers we have today to innovate faster and be more productive, and that gives us a competitive advantage.
Chuck, can I sneak in
I don't think I like you.
Roundtable question?
Nope.
I like you now.
There is this debate about the president and what some argue is an encroachment into strategic decision-making among private enterprise, whether that's where they invest in CapEx, who's suitable as
you're
a CEO,
so full of shit.
who should be writing their in-house research.
You're a liberal.
The revenue cut from exporting goods. Is that something that you expect the roundtable to push back on at all?
Look, I think this president has a different way of running the country, and I think we all understand that. And so I think he's going to do what he wants to do and what he needs to do. I think the real thing we need to focus on is look at the strength of the economy, look at what's happening in the markets. I think look at what's happening with trade right now and unemployment. I think the metrics would suggest that things are really good. There's obviously a lot of complexity in the world, but I think those are the things that we're focused on.
All right, Chuck, one last one. You were, when I was with you last, with Jensen Huang, and a terrific joint deal. And then you were over in the Mideast, where you're doing great stuff with really doing stuff with AMD and Lisa Su. Can you tell us where those two giants are in terms of changing the world right now?
Well, they both have huge value proposition, obviously, and you see, I think that the NVIDIA story is well understood, and I think Lisa and AMD, they're coming on very strong. They're certainly being deployed in a couple places in the Middle East where we're working with them. I talk to Lisa quite regularly, as do I talk to Jensen quite regularly.
You ain't talking to me.
The good for us is we can partner with both. We can bring our connectivity layer to these players, and whether it's these sovereign clouds around the world or whether it's these emerging neo clouds, where candidly our enterprise presence and our go-to-market presence is one thing that they really admire. That's one of the things that both NVIDIA and AMD want, is they want us to help them position their technologies in the enterprise. So we think that we can partner with both and actually deliver real value for our customers.
Well, look, Chuck, thank you so much, and thank you for a business roundtable question and answer, because I think a lot of us are thinking, wow, I mean, it's not like the old days. Sometimes we feel that business people maybe need to be defended a little bit more, but that's just personal thinking. Chuck Robbins, who runs Cisco and is also the chairman of this business roundtable. Thank you, Chuck.
Thank you.
Taking another look at the pre-market this morning. We'll get more squawk on the street and move to some movers after a short break.
So we're going to see today if we hold this here blue area right in here, 64.54. I'm going to take it to that body right here on this candle right here for the alert. Good morning, retail traders. Okay. I've been watching Buff Bagwell. Marcus Buff Bagwell got his foot cut off, his leg, in a car wreck. He tried to keep it, but it's kind of interesting to. I listened to him a couple of days and I said, oh, I'm going to follow him. AMD's, man, we got some good pullbacks.
One of our favorite times of the month.
AMD, watch it out of the
CBC
gate.
Investing Club holding their monthly meeting today at noon Eastern. Jim, you want to tease in?
It's overbought, but still yet. If we get a rebound, it'll bounce.
That's coming up at noon, as we said. And for more information on the club, you can always scan this QR code on your screen.
We got 4 minutes left.
.com/monthly meeting. Look forward to what Jim has to say in just a couple hours.
Let's not listen to what Jim has to say.
Less than 5 minutes. Don't go away.
I might put my other monitor on here because this thing acts weird. Perfect. We're gonna have a good day today. Hope everybody's excited as I am. I don't do much swing trading when we're at all-time highs. I have to wait for like the pullbacks. So we're definitely at my support level here on the SPY right at open. And we could dip a little lower. So I'm going to put a price line alert right here at 641. So right to 641, perfect. I love when things work out. So we got Tilray. Had some shares of it, and it popped. Popped and dropped. Tilray seeks NASDAQ extension to meet minimum share rule requirement. It has to stay above $1. Tilray reconfirmed strategy to regain NASDAQ compliance, request extension to meet listing requirements. I better clock in here. Good morning, YouTubers. Do you want me to stay on YouTube? Give me a hell yeah. Heck yeah.
Let's get a mad dash with Jim before we get to the opening bell.
In this country once had prohibition.
I thought I had you on mute.
Self-prohibition.
Bling. Let's see if she's showing some cleavage today. Oh God. The doom and glooms. Here we go. Right here. Okay, we're at my support level. We're at a double bottom from yesterday. So get on it. SPX. Reddit open. Today's the 14th. We're looking at the 6460s or the 65s. And I'm going to go for the 60s. This is a fast scalp trade coming up. 6460s at $5.90. Let's watch it. We got to hold this support right here. Let me put that. I got to get my. Come on. 560. So we got to break 64.45.16. I'm going to grab one contract. That's 64.60s at $5.40. 520. There it is, 540. SPX 64.60s Lotto. This doesn't hold, I get right out. Because it's kind of still early. Give it some time. It's just sort of there at the spike, but I was busy. There's 560. Tail rate bounced back up. Tesla at 335. We got a double bottom on well, we got a yin yang right here on Tesla at 334.39. I'm going to be precise with this thing. Oh, wrong one. We're at 620 on the puts. I mean on the calls. So we're up $100 a contract. Get out. Sell it. Well, we could go up higher, but we get back in that blue area, but I'm out of this trade at 660. Thank you very much. Anybody take that with Bobo? A plus. Disney bouncing up. We got AMD on watch. Anybody watch? There's 790. AMD's a go-to trade. Let's see what it's done. Look at there. You can't say no to AMD. Dang, 790, man. There's another $200 left on the trade. 7. So we're back at the 9, 3 white soldiers, and about to a double top. Tweezer bottom on the 1 minute time frame. Dadgummit. Cockroach. There's SPY. I'm going to leave them supports, try to leave them supports in the window. And resistance levels. These now become resistance levels. So 649, 644.49. Yeah, I used to box, so I keep up on boxing. I wish I could still do it, but I'm too damn old. So we're in the heat map. I didn't vote. I didn't see it. Good job, Ambardo. Thank you very much, young man. I don't know how old you are, but I wish I was young again doing this. I'd have so much fun in life. I didn't struggle, but I just became a workaholic and always had it made compared to a lot of people around me. Like, I'm buying a new well pump for my sister because she just doesn't know how to save money. And she doesn't respect the fact that I'm helping her, so I don't know. Sometimes it ain't worth it. Mister? Cisco. We've got NVIDIA. NVIDIA had a double bottom here. Triple bottom. I mean, see all these little support lines? Bounce, 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 bounce. On a 5-day. HIMS is getting cheap. I always thought this was overbought. Intel under 20. I kept saying it's a buy. Now we're at 22 bucks. Yeah, hello. Could you tell me where support is on the SPX, Jim? Yes. You see these 3 black crows? Or these 3 red candles, these 3 candles here? Let's see if it holds between this channel. Now PPI was warm, hot. So that, I don't take too much, I don't I don't let the numbers direct how I trade. I let the charts do the dictating because I can't trust government numbers. I just can't trust them. But the fat cats do, and I think they won't admit it, or they're starting to admit it. It's like the jobs numbers. The jobs were good, 240,000. Not everybody reports the jobs. I just cannot trust them, but it will influence the market sometimes. We got a triple bottom coming in on HIMS. Coin's bouncing up a little bit. AMD is just a no-brainer every morning. Same as NVIDIA. Meta's at my support level here at 772 and bounced off of it, and I haven't touched that from yesterday. We definitely hit resistance on the SPY, so we got to break that 200 at 643.54, or we pull back 643.59. I mean, $633 what? Johnny Ringo gives me an A+. Very good, Johnny. It's good to see you post. You understand why we took it, didn't you? Yep. If you pull up the 15-minute time frame on SPX, you also run into the 63 EMA. And I use that 60. I use all these here as support levels, but the 63 is a medium. If we got down here, you know it'd be a good sell-off. That's on the 15-minute time frame. If you pull up the hour, we come close to the 21, but you got a gap right here, that previous high that we had after hours a couple days ago, that closing high. And you see how it bounced yesterday off that closing high? And today it was a double bottom off yesterday's closing low with a tweezer bottom. So that's called a pivot point. It's called a yin yang. I made that up. That's my own definition of what was resistance now becomes support. This is called a neckline of a three-headed snake. You got triple bottom, and that's your neckline. So that's got to break today. $64.54.31, or we just don't go higher. you could look into the day and say, okay, we might double bottom. So you want to set an alert right above the double bottom. This is a symmetrical flag on the 1 minute, called a triple top. Hamburger also was at $5 a pound. They've had it for 7 for 3 or 4 weeks up there, and I've just been waiting for the sales. Today I got fresh hamburger. Okay, we just now got to 64.54, and these are at 8.20 from 6.20. We'll see if we're going to break. There we go. I'm going to sell it, because I don't know. SPX. Now, if we can gain respect with the body of this candle above that 64, 54, 31, we'll definitely shoot up and hit this here wall. And you got 3 of them lined up here, so that's a thick wall right there. The 200 SMA, the 200 EMA, and the 63 EMA. So I set an alert right before that, and maybe buy a put at the mark at or above. Spy. We're at the 200 definitely right here is your exit idea. Look at that, $9.20. Seek. Seek! Buy the dip. God, that was a good call. 10:40 now. Scratch my earlobe. Market doesn't care about crap. We got them fat cats so concerned they don't know what the heck they're doing. They just don't know. Ain't that right, Funk? I'm tired of watching this market. Wrong answer. Baba's down and reversing. JD's at the 200 on the, these are all on the out, this is on the hour JD, but on the minute Baba. I gotta get back in this trade. God, look at that. That's beautiful. Definitely at my last resistance. It said an alert on the VWAP on the /ES. /ES, I got a VWAP set. I'm gonna see if she, I hadn't even checked to see if she got any cleavage on today. God. The blonde, she doesn't show cleavage. Okay, we're pulling back here. Oh, there we go. We're at the pivot point. If it stays here, we stay bullish. Got to stay here, though. Prepare ye in the name of the Lord. calls at $7. Lotto. Got to stay here. There's 8:30. You know what to do. Washboardjim had a call. Then he'd get ready to sell it. Ooh, yeah. At $8.50. With a win-win here. And a win-win there. Everywhere a win-win. Out at 8:20. You got to be sharp when you're at this game. Good morning, Robert, on YouTube. We're winning. Remember, that was the pivot point. We had the previous high and the previous low. See what I'm saying? You had a head and shoulders right here. You came up and hit that shoulder line twice, pulled back, broke out, pulled back. That's called a pivot point. As long as you stay above that. Well, what was this? The blue line was, yeah, a triple-headed snake. And then the triple bottom from yesterday. God, look at that, $9.40. I left another $1.20 on there. Okay, I'm gonna go get my tea. Today I'm gonna have a fresh slider with a bowl of soup. I wish y'all could taste this soup I make. I guarantee it, if I fed it to your ladies, they'd leave you in a heartbeat. I'm gonna fall in love with Jim. He can cook some great soup. Double bottom on Tilray today. It's acting like a normal stock finally. Jimmy called the bottom on Tesla. You had 3 black crows with a tweezer bottom. It opened. Pulled right back to it. Boom, baby. Mister's down $13. Getting real close to support. I'd keep an eye on Mister. That's on the 15-minute. So I just go over my watch list, and if I see something that's down big, I want to look at it. See, like Amazon's up $5. I'm going, what the hell's going on here? Amazon grocery expansion to leverage warehouse. Delivery trucks. Walmart can hold its own in food fight with Amazon. I want to read the news. I want to see why that stock's up. I want to go to percentage winners and losers. Shop is down 4%. And we have no other support on the 5-day. So I go to the 20-day 1 hour. And I go, we hit the 200 right here. And we had a huge bounce off earnings. So it can pull back more. It'd be a strong buy if you said an alert around 130. And I'm going to write 1 hour resistance. One hour resistance level on my alert. So when I pull it up, I'll know exactly what I'm talking about or thinking. I'm going to draw an alert line. I want it to be a little bit below that alert. So I might want to raise this. Well, buck's pretty good. Yeah, I'll just leave it there. Tweezer top, we had a pullback right to the support channel. On SPX. Double top on SPY. We got a double top on SPY. Set an alert here off the body of that candle for a double bottom off the VWAP. I'm going to type in VWAP alert. You know what's next, don't you? titties and hair marketers too. Me and you.
Strategies tight. Washboardjim in the trading fight. Pull back, come, then the chalks will rip. He calls the shots, never loses grip. Selfless soul with a heart of gold. Teaching secrets that never get old. Jim likes titties and telemarketers too. Teaching fools like me and you a work of art. Strategies tight. Washboardjim in the trading fight. Lines and candles, a dance on the screen. Risk and reward in a world so mean. But Jim just laughs, tips his old hat. He's got the moves, imagine that. Jim likes titties and
Marketers
telemarketers
too.
Teaching fools like me and you a work of art. His strategy's tight. Washboardjim in the trading fight.
We're at a resistance. We're going to see what the market does now. We've been playing around with my 64, 59, 82 here for a bit. Oh man. Jimmy likes titties and telemarketers too. Oh, we've got another one here. We'll play that one a little bit later. What do I call it? Breakout and rips? Breakout and rips will work. We are squeezing. I don't know, we're not really squeezing, we're just at a place right now where we gotta, I think we're gonna pull back. Remember, the PPI numbers were warm. And then you can't believe the market will try to manipulate anything they can do to get the Fed to lower rates. They're way too damn high, way too long. I mean, they should have been cut at least to 5. Two points. I agree with Bessett. 200 would be great. 2 points. And it still would be in line with inflation at 3%. So I don't know what the heck they're, I don't know. I'm not a professional either. I can't. I'm just saying what I feel. I like it. Can't wait to listen to it in full. I'm gonna turn all them into CDs. I'll share 50-50 profit with you. I think it'd be a cool idea. That way you can you can sponsor me instead of me begging for money for my vacations. You can buy a CD for $100. I can't believe I got a bag. I stay here all day long, 8 hours a day, for free. Oh, I don't want to change the time frame. Just leave it the way it is. On the 2 minute, we hit the 200. We're hovering at the 200 on the 5, 2, and 1, and the 63 on the 15 minute. And we've held down there this morning on /ES. That's another thing to look at, the 15-minute time frame where we held that support level for a good hour. That's very notable. Hand soap sold across the United States and Puerto Rico has been recalled due to dangerous bacterial contamination. What the heck? Life-threatening sippus. Hand soap across the United States. Well, what is it? That's got to be bullcrap. Well, what's the name of it? Government recalls. Man accused of defrauding Missouri grocery store for $15 million. Back tire ignition. We're determining. Drama Right website. Dharma Clean. Is an OTC healthcare I gotta know this because I hope I don't have it. Dharma Right. I don't have that, so I'm okay. We're at resistance. We're at resistance on that spy. 64449. Do you understand? Do you understand me? Say yes. First support. 645.63 if we break 644.49. Do you understand? Michelle. Where's my A plus for getting? I don't even know what the poll was. If the poll has something to do that you shave your pubic hairs, yes, you got it right. Does it MA shave his pubic hairs? Is the new poll. I don't even know what it is, but I'll give you an A plus because you've been so accurate lately. I'm going to spread the rumor around. Oh, I got a message from Angela. Did you get my navigate? Did you get my navigate through the platform I shared with you? No, I did not, honey. Oh, Emma Jamma says hello. That's another good trader. Amajama Trades. For a girl. Today I'll be cooking a slider. We'll have a piece of a slicing tomato, 4 medium-sized pickles with some sharp cheddar cheese with mustard on each bun. Oh, I can't say always, because I haven't seen any charts. When I see charts, then I might post always. I don't think you should be shy. Anybody should not be shy and embarrassed if they post a chart, because all I can do is criticize it. I've never criticized anybody that puts effort to show a chart. On what? Slash. Also going to put in a little alert above the bottom of the orb because I see a let's see what's she doing? Is she being stupid? Oh God, that's beautiful.
I think I found a problem.
That's just plumb beautiful. Can't criticize that. as I was saying, we got 8, 10, 20, 30, 40, 50 minutes of consolidation at the opening here on ES on the 5-minute. So I'm going to put an alert just right above that area, just in case it doesn't hold the orb. Okay. Well, she bounced up. And that was a double bottom. That's a double bottom too on the 1 minute. Almost a perfect tweezer bottom. I'm gonna go get my tea and I'll be right back. Okay. Boom! Boom! Did Funky say, oh my God? Yep. So there's one reason why I would have took that. That we didn't touch the orb before when it pulled back. There's two reasons. It bounced off the 50 SMA, and then it came back down and did a double bottom and bounced right off that 50 SMA, about the same spot that it was before on the body of them candles on the 1 minute. So I had a couple reasons to take that trade. On the SPX. And the size of the candle that came on that tweezer bottom, I would have probably jumped in it there too, maybe. For sure, because it bounced off the 63, held the 63. What was resistance on the 63 now became support on that 1 minute. And then on the ES, it bounced off the 63 and it did a double bottom off the 200. And the 63 crossed the 200. And it kept trend line on a 1, 2, 3. So we bounced off the 63, bounced off the 63, and then we hit it again for the third time on the 1 minute on the /ES. We've got a tweezer top on the 1 minute on /ES. I'm going to raise my alert above the 200 because or the 63 because we bounced off that before. And then it's going to get old and eventually it's going to give up. You just can't keep doing the same thing over and over and over again. Oh, God.
code is.
I hate when you have to code when you have to put a code in your shit. AMD's pulled back. We got a snake with an inverse head and shoulders, a diamond-shaped pattern. We have to break resistance of the wall. So we got a 1, 2, 3. Anybody got a stock they want me to look at that they're question, just private message me. Jim, I need a double verification if we're at support. Will you please give me an answer? And then type in, I love you. We have a sharp pullback right here on shop. IWM. We're at the 63 right now on the 1 hour with a couple dojis. We got a yin yang support, I think, off that 63. So it's got to break that blue line. Oh, there we go. It's got to break where we are right now. 228.30 has to break. And support, we'll have a 1, 2, 3 triple bottom support. At 227.67. So long to 229. And resistance to break is going to be 228.34. We got a triple top, quad top. So support, I'm going to set an alert right there at 227.82. But we have to break 228.34. 10-4. There we are. I asked the ladies at the IRS counter today, I said, you want me to get you some wipes? I just told them about my experience yesterday. And they said, oh yeah, we have that here too. And their biggest complaint is people smell like they smoked a half ounce and then walk in there. What's going on here? They can't. It hurts, you know. Watching IWM. We're sitting here. You got? I'm gonna put my chart. Did I put my chart in the room? Put my chart in the room.
I got 226.71 month off.
I think we're.
What you got?
I got a. Let me see here. I stuck it in Milky's room. I got a. Damn it. We got 228.34 to break. 228 with a 227.67 to hold.
Okay, where'd you get the 227.67? I'm playing to see where I got my 226.67.
Pull up the 1 minute and you'll see a triple bottom.
Okay. Now put mine off recent swing time hourly.
And I'm going to call that pivot 228.34 a pivot point in a channel. To the 200 at 229. Oh, I'll put the chart in the room.
If you look at the hourly, you can see where 226.71 was a swing high from maybe 2 weeks ago. But it also, if you look at it more closely, you'll see like there was this big run up from the 1 hour trend line. You got 1, 2, 3, 4, 5, 6, 7, 8. You got 9, 8 candles coming up, and then you got this one red candle where it pulled back. And then it launched again. It launched dead off that 226.71 area. That was that swing low over there.
And you know what else? That 227.67 area has the 63 EMA. I mean, 61 EMA, if that's what I said. 63. God. On the 1 hour. And you have your tweezer bottoms. You also have 2 dojis, spinning tops. A doji, a red doji, and then a spinning top, or turned into a hammer. Running into the 50 SMA. The only thing bearish about it, the 9's crossing down over the 21, but I don't think that means much. Not on the hour. Damn, look at that SPX go, 1700. I looked at it. Oh boy.
Yeah, this is a shit show, man. Those numbers came in this morning and the market does this. This is such bullshit.
Well, I find them sometimes hard to believe. We got a first president that's a business president, and in the market, and these fat cats, they don't know how to deal with that. They like that free money. They're not getting it. I'm not hearing Trump saying we're going to give $5 trillion to a failed company like, what is it? I can't remember. The EV car company got $7 billion right after Trump won, and then Intel got a bunch of billions, and their failed company.
Economic data does not fucking justify these valuations. It just doesn't.
No.
Network defaults are as high as they've been in 20 years.
Oh yeah. Man, we're bankrupt. We're not $37 trillion in the debt. We're at least $160 trillion in debt if you count unfunded liabilities.
This market is pure opium at this point, and when the correction comes, it's going to be bad.
We've been on a bull run for, well, the government shutdown didn't help matters during COVID, but they forked out trillions of liquidity out there. I didn't think they had to do it, but they did it. It didn't help me none. Just made my life worse. It cost me $1,100 a month for 4 years. A month. But I run a business, so, you know, I feel the...
And you're a people person because you own a business.
I am.
You're what's wrong with society.
Yes, I. Okay, let's see if we can catch this knife. Investors digest jobs claims, inflation data, and U.S. equity futures turn lower pre-bell. By the dip. Whatever you do, don't have a politician be your accountant.
Shit, Nancy Pelosi can be my accountant. I'll let her manage my money.
Did you hear that, Nancy? Funky likes you.
Well, I don't like her, but damn, if she's gonna make me rich, let's do it.
I got Nancy, you can't touch her.
I don't want her, I just want her to manage my money.
Okay.
You be the ice cream with the bulldozers wrong here.
I already got you beat on that one. Jimmy better not hear anyone say anything bad about my new girlfriend, Nancy Pelosi. I hate to lose all my free ice cream she gives me, paid for by the American taxpayer. Okay.
IWM was hanging on to that 63 on the 1 minute for dear life.
Yep, we're squeezing between the 21 and the 9 right now. I'd like to see it pull back and hit the 63 again on the 1 minute. Just a big old fat candle hang down there. But it could bounce here. And I'm too far in the money now with my 64.60s. So we go to the 75s. And I keep the 64.60s in line just in case we get under 1,000. Google's bouncing up. Yep. Sure did. Was impressed. Here we go. And what time is it? It's lunchtime too. So I got to be real careful here. Where's my 360? Okay, here we are. 63 on the 1 minute. And we got the 200 pivot point area, which was the hard resistance that I had to break. So if I get in here, I buy 1, and if we dip, or 2, If we dip down, I'd buy 4.
1.5 million is to our
3.60. Go, baby. This is off the 63 and the 50. The 50's trying to cross the 63, so maybe I'll learn something here. They got kind of tight. We're at $4. I could sell it here for 80. This might pay off. And back to 4. Yeah, I mean, I the 9 crossing the 21 kind of makes me feel a little bearish. There's 410. Now I can get it. Dang it! I'd have took that 410, made $100.
You're in the 64.75s.
Yep.
I won't sweat it. You got a lot of support on the 5 minute on the S. You got both 200 and the 63 right below you.
Very good. The 200. I'm just below the 9. That's the only thing that worries me there on the 5 minute.
Yeah, but you could just get the 21 tab like you had the 925.
Yep.
Looks like 3 Black Pros on the 5.
The 1 minute looks better off the 63. Yeah. On the slash ES. The candles are getting thinner. I got them at 360. Yeah, I knew that was going to happen.
You just have 200 on the 5.
We're coming down on the 4th support on IWM. Four crows. See this? I did a video on the 9 and the 21 crossover. This is a bearish sign right here. And if the 9 was crossing up over the 21, it'd be more of a bullish sign. We had a golden cross right here, but I don't know if that matters on a 1 minute. But it did matter here because it had a nice little bounce. That's when the 50 SMA crosses the 200 SMA. Guardian Auto R. So let's see who this is. Always clean. This is Jim. May I help you?
Hello.
Hello.
Are you there?
May I help you?
Hi, this is Sophia. How are you doing today?
I'm great. Who do you work for?
I am calling to let you know that the government is giving subsidy without any cost to you. I just have to confirm your eligibility. May I know, are you under the age of 65?
No, I'm 85.
Please, can you repeat that again?
I said I love you. Are you married? Would you like to have some babies? At least 10 of them? The answer is no. No babies for you.
IWM just got into my 227.60 level.
We're getting here close to support. We're at $3. This is do or die right here. Right now. So let's do it. This was the game plan. And it's a little risky now. Triggered.
Yeah, I think it's Masters back in the 5 zone too.
We're at my support. So it has to hold here or I jump out of the trade, take the loss. Because we have a pretty good dive to 64.54 off the orb. So this has to hold. If not, I get out. I gotta have 330. No, I changed that. I got 4 of them. They're like, put my 2 accounts together. Average 320. Yep, I think I'm. As long as I hold this support, if not, I get out. But it's not working. Right here is it. No, don't. See, I'm definitely bearish now. I'm under my 200s, but I'm still above my support. If I had 6, I'm not going to do it. If I did it though. Yeah, no reason to. That'd get me under $3. Go, 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 go. There's 320. I'm even. Now, do I sell it even? This happened to me yesterday where I could have got out even, and I got burned on that one trade. Yeah. Now I got the 50 SMA up here, and you see this here wall? I do, Jim. I see it. $64, $65, $19. Richard, you see where we pulled back to that fourth bottom there on IWM? That candle before that last one on the 1 minute. That's a kind of a spinning top hammer. And if you can maintain on the 1 minute the bodies of both of them candles, we might go back up. But that's your final support, 227.67. I'm even here, so should I sell? That's my question. The QQQ is at the 200 EMA. The SPY is at the 200 EMA and bounced up. That's on the 5 minute, not the 1 minute. The IWM. If I said 1 minute earlier, I was wrong. Now we're pulled back to the damn 200 here. So we're retesting what was support. If we can keep maintain a higher low off the 200 here, we'll be fine. But I had my chance. This really would keep me happy if we held here. About ready to go in there and start lunch. Yeah, I think I'm going to get stopped out of here. My bottom here would be 270. Yeah, I'll go ahead and get them. Take the risk. Yeah, because now we can drop down a lot farther if we don't get back up here and break this. Comes a shakeout. $180. So we pull back to its second support right here. We're back to that pivot point area, the major support. $120. Now let's see what happens. $186. Towards your bottom. We're at the bottom. I don't know where the bottom is. Let's look at the slashy yes here. On a 15-minute, we hit the 200 EMA and we're tweezering on the 63, which is bullish. 5-minute, we'll know here if we can hold support on the 5-minute. Between that body right there and the wick. I need 186 if I get it. Let's paradise too. So the SPX, we've got a right there. It's around 64.58 for support on the heat map. I got a lot of contracts here of SPX, so let's see. I'm at 145. We're at resistance again, which was my low support off the orb. So if we can hold the orb, that was resistance. Oh, it's IWM. Oh, my tea. Glad it wasn't soaking, because it'd been soaking too long. Yeah, it's not looking too good now. The 6460s are getting in range again. Right back. I'll get away from this for a second. Chill raise that support. As I prepare my lunch, I'm going to watch this thing go back up. We've got a snake breakout, pullback, higher low, but I don't know if it's going to go. I more or less saw that pullback coming, but just by looking at the 1 minute earlier, right now we got a snake with a big old engulfing candle. It's maybe back up to the 63 if it holds. If not, we're going to come back down and hit this double bottom. Oh. Oh, I gotta cook that chicken too. Shut. Okay, come on. Might have to work some scalps in to offset this. $95 to $115 right there. 120. Back up to the orb. So that was a fast one. $95 to $120. Come on, you idiot. I've still got my first one. Now I got a wall up here. $135. Go. Bring it. Now I can get out right here and be even by using that scalp right there. But I ain't going to do it. I want to see if we can get back up here. No, this is really a good spot to get out. Dang, if I'd have just held them to 165. This all of a sudden breaks. I got a 186 average, so I get out 170 and be green. 175. 180. Three white soldiers. What do I do? So this was snake, breakout, pull back, double bottom, higher low, boom. If I can just get up here, I'll be even on that first trade. Please. Peace. Peace offering. Animal sacrifice to express love for God. What? Wish I'd have never read that. I love animals, Jesus. There's 195. Okay, here we go. I'm out. I'm getting out. It's too big of a risk. I can rethink. I'm out at 180. And I sold those other ones. Yay! I think that's the smartest trade I've made this year. Getting out even, a little under even. than taking that one. So I'm gonna go check my hamburgers. Now, you see what I have, YouTubers, in my hand? It's not cheese. It's butter. Mm. Yum, 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 yum. Does anybody eat butter raw? Mm. Let the salt get in you. We're at 120. I got, look at these buys come in. Excuse me. Does anybody eat butter raw? Livid goose? Yes or no? yours. Okay. Can we get 125 on Tilray? Yes or no? Oh my God, don't tell me. No. 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 Ah, oh, okay. I'm okay. No panic attack. It's at 180. I was going to say if this sucker went up to $2, $2.25, I'm going to go in the bathroom and shit on Nancy's face. We're at resistance. Okay already. right, she dropped it. Get ready again. We're at the 50. We bounced off the 50 twice, 3 times. So 115. God darn it. There we go. 115, $1. Man, these are good looking sliders right here. Juiciest little burgers you ever did want to have here, guys. Let's hold the dollar. I said, let's hold a dollar. that. It's called a slider. That's what I'm having for lunch today, 2 of them. Okay, I think it's time to play a rebound song. Michelle, give me a grade on, give Livid Goose a grade on this one. Oh, we got a new one, Nancy? Oh, this might be real good. It's a love song.
Nancy plays a game. Everyone loses but her. Nancy doesn't care. Nancy only wants more. Nancy, she doesn't even see you. Jim's gonna shit on your face.
She's gonna shit on your face.
Trader's gonna shit on your face too, just for being you.
Oh no. Gonna have to add.
Little people scream, but she can't hear in her tower. So high, it's all a blur. The pain below. Does she even know the damage done, or does she sleep so sound? Never a frown. Jim's gonna shit on your face. Retail traders gonna shit on your face too, just for being you. Jim's gonna shit on your face. Retail traders gonna shit on your face too, just for being you.
It's got to bounce here. Oh. Need a big rebound here. Kind of got stuck in this one. Well, well. I'm not going to do nothing. I'll just sit on it. So we got these at $1. I got 5 contracts. So, and that was good lunch. I'm going to have to do a video on that song. Oh, what was that? That's what sliders. Sliders. Back to 75 here. So we just 85. Now we got a hard resistance to break here on this blue line. If we break it, I think we can break to 63. If not, we've got to break the blue line. I mean, this is important. Listen to me. This is very important. If not, get out while you're even, or out with 90 bucks. I'd get out now and not be down that much with $90. Only be down $50 for the trade. You get a, I mean, you're in the hole, you got a tweezer bottom, you get an engulfing candle. And it's freedom if you break to 63. Do you understand? Do you understand me? Break it. I'm going to go into the kitchen and I'm going to put in my greasy plate and have Nancy wash it. She loved the song, Livid Goose. She just loves it. It kind of got her a little horny is what it done. What's the question? Serious question here. I was in puts and I held them because the 63 crosses over the 200 as well as the 9. Is that something you watch, or was I lucky there? No. Now I don't know about the 200, but I've watched that too. But if the 9 crosses down over the 60, over the 21, I know that strategy. Usually the 9 EMA, I use it for one thing. It either tells me if we're bullish or if we're bearish. If we're under the 9, we're bearish. If we're over the 9, we're bullish. So when the 9 crosses down and the candles stay below the 9, then you know you're bearish. Does that make any sense? Say yes or no. Bullish, bearish, and then the 9 crosses all the other moving averages. Russia, Russia, Russia. I gotta listen to that song again. That kind of gave me goosebumps. Nancy, come here, baby.
Nancy plays a game. Everyone loses. doesn't care. Nancy only wants more. Oh, Nancy, she doesn't even see you. Jim's gonna shit on your face. Retail traders gonna shit on your face too. Just for being
Just for being you. Oh, Nancy.
little people scream, but she can't hear in her tower. So high, it's all a blur. The pain below. Does she even know the
Nancy.
nor does she sleep so sound? Never a frown.
Never frown.
Jim's gonna shit on your face. Retail traders gonna shit on your face too.
Nancy, 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 Nancy.
Jim's gonna shit on your face. Retail traders gonna shit on your face too. Just for being you.
Just for being you. Just for being you. Nancy. I'll meet you in the bathroom, baby. Nancy. Yeah. I'm in love with it. It is Nancy Pelosi, matey. Matey mate. Who doesn't love Nancy? I do. If it wasn't for Nancy, I wouldn't be doing this today. I give all the credit to her. Nancy Wise. Okay, Florence, we're there, Florence. Florence, we're at the support. It's got to hold here. Or we drop $2. Nancy. Nancy, did I ever tell you how much I love you? I've got a slideshow that I'm going to present next time. I will play it again today. So be ready. I've been all over this country looking for the most perfect woman. And when I saw you on the Senate floor, I said, damn, I want more. I don't care who gets in my way, Nancy. You have no idea what you've done with me and for me. I know I'm getting carried away with this, but it's true.
Nancy plays a game. Everyone loses but her. Nancy doesn't care. Nancy only wants more. Oh, Nancy, she doesn't even see you. Jim's gonna shit on your face. Retail traders gonna shit on your face too, just for being you.
Just for being you.
Little people scream, but she can't hear in her tower. So high, it's all a blur. The pain below. Does she even know the damage done, or does she sleep sound? Never a friend. Jim's gonna shit on your face. Retail traders gonna shit on
Your face too.
just for being you. Retail traders gonna shit on
Your face too, Nancy.
just for being you.
Oh yeah. Maxine next. Oh, Maxine Waters. Oh, that's too much. So we're looking again. I let a little bit of time pass. And I'm going to move these up to the 6460s again. Prepare ye in the name of the Lord. We've got a Head and Shoulders. Make sure you watch tonight's video and share it. So we do have a heat. Oh, I just now saw something here. We have a, you know what this is? See them green lines right there? This is SPX. This is called a pennant flag. And we have a double bottom support right there for today. But if, I'm going to see if I can, I don't know what to do. It's got a megaphone. We got an IH. What is IH? That ain't no inverted hammer. That's a tweezer bottom on the 15-minute on SPX. Prepare ye in the name. Oh, we've already hit it. And we're bouncing up. Well, that sucks. There it is right there. Tweezer bottom. And then we're at what? Okay, I gotta think here. Very clearly, we may have national security crisis. What? Live on CNBC, White House trade advisor Navarro says pharma tariffs are likely under Sanction 232 probe because it's very clear that we have a national security crisis. CNBC. You got to be kidding me. Can you believe these people? Live on CNBC, White House trade advisor Navarro says, who is this Navarro? Navarro. Navarro. I mean, who would have a name like that anyway? White House makes pharma. White House Navarro says pharma tariffs likely under Sanction 233. Now you're a dick. Peter Navarro. I wonder if he's Trump administration is likely to have levy tariffs. Yeah, can you believe this? They're just going to go way out of their way to make up anything. He's a Reagan Democrat and a Trump Democrat. So he's a centrist. He's a centrist. Peter Navarro stated as a liberal Democrat advocating for environmental issues, so he's a big liberal. Navarro hasn't always been a Democrat. Huh. Oh my God. Okay, we pulled back some here. Let's look at the 30-minute. Oh, SPY. This is SPY. So I got 161.86, 162.78. There you are right there, 462.78, the second support that I called this morning. And we did, and this was before, and we did hit the third one today, or second, 642. Wonder where I got that at. I got 641.86, so we hit the third support. That's an inverted hammer right there for sure, with tweezer bottom. See, I got the candle. I think we're going to have, dang, see, right there, 270 to 330. I should have got that. That's a triple bottom, counting that wick. Well, I'll be right back. All right, wait here a second. Live Goose, I'm glad I got you as a friend. You made my life so much happier. That'd have been a good trade right there if I'd have took it. Dadgummit, there's $4. And the 6470s, just where they are, at 120. Why? I'm gonna have to clean this up because it's kind of getting dirty. We'll still keep them on here because that's what's important, these right here. If we break at 64, 54, 31, that's the major resistance I called this morning. I missed that trade there. I should have grabbed it at 270. Now they're at 460. There would have been $200 a contract right there. Nancy, it's too cold. $480. Russia, Russia, Russia. $5. No. No. Mm. Well. Dirt it. $300 a contract. I'd have bought 3 of them, probably 5, maybe 3. I bought 3. Keep it under $1,000. Slash ES bounced. We just hit the 200 on the 5-minute, 200 EMA. Well, not bad day so far. Whoops.
$2.5 at expiration. Now, you got a lot of risk here, Kevin, on this one. About $16,920 if you collect a 330 credit. But, Kevin, you don't start getting hurt until 169.20 on the downside, so you got that big cushion.
Exactly right, Ted. You know, you're slipping the tongue saying covered call. You weren't wrong. It's the same profit graph, right? The cash secured put, covered call, same profit graph, except you don't need the stock because there's no dividend. So this is one that, right, if you think you might want to do that, this is one trade to buy the stock at a lower level and wait it out.
Yeah, you got about $12 to that break even to the downside. So you do have that cushion over the next 2 weeks, but if you do hold that short put, remember you're going to have to buy those shares if it's below 172 and a half into expiration over the next 15 days. So a lot of risk to the downside, but a big cushion also before you start getting hurt. All right, that's going to wrap it up for us today here on Fast Market, but stick around right here in the Schwab Network. Next Gen Investing is coming up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking,
I don't know this J.D. Powers.
Features of our checking account, plus cash management solutions, all designed for investors like you with unlimited.
Sorry. I missed a good trade right there. Triple bottom. Did I tell you the last 8 eggs I've cracked, 4 of them were double oak yolk? We just now hit the 200 on /ES on the 5-minute.
The next one, but I thought it would be a lie too. I don't just have Deere and Company tractors in my yard either. But let's talk Deere and Company because it's almost like we're going in reverse order here of worst performer to you know least bad performer.
John Deere took a beating.
Under some pressure as well.
Our earnings were good. It was the forecast.
Chart. It's been sort of consolidating, going sideways for the better part of the last quarter. Breaking lower here today though. Anything in particular stick out about this one?
You're not riding around in their tractors, Alex. So I'm also not, and maybe that's part of the problem. Maybe they need more of us. I'm just kidding here. Look, in terms of their most recent quarter, they actually did do better than expected, but there are some pricing issues that the company has had, and that's one of the concerns here. And you also have that decline in revenue. So this is a pattern that the company has been facing. So the stock is getting hit today. It's down 6% right now, down more than 6.5%. So not being dinged as hard as Tapestry, but it is being dinged today. It also has been an outperformance.
So I already had this thing charted.
Again, also
for a
not as strong
pullback.
as Tapestry in terms of this most recent quarter. Like I said, they beat on both the top and bottom line, but they also narrowed their guidance.
It's bounced off 63 many times. So if we hit
they're
that,
expecting to come in between $4.75
in the 50.
billion to $5.25 billion. They are making
Either one.
forecast for some segments, though, production and precision agriculture sales. They're maintaining that forecast, but they are still expecting it to be down between 15 to 20%. Construction and forestry sales, they're expecting that to be down 10 to 15%. So they're expecting some declines. The CEO cited challenging times, weaker volumes, high levels of used equipment. That's one of the challenge here is, if their market is still, utilizing used equipment, they don't have the need to replace it, and that doesn't bode well for Deere.
Yeah, quite frankly, you went through the two names, and there's disappointment, especially in the case of, Tapestry with some of the Kate Spade things that you talked about. But as we transition to this next name, JD, like everything I've seen about this, I am shocked that it's not the worst performing name of this bunch. Like this was a really, really disappointing quarter for the stock to only be down 2.5%. Unless I'm missing something, Diane, like I would be like exhaling with relief if I was a shareholder in this name post these results.
So I didn't think that. I mean, I think it's, I think my take is they did actually beat expectations. The drivers of that are the challenges here, right? Because how long can that keep up? When you convert it to dollars, adjusted EPS 69 cents, that's a B. Revenue 49.79 billion, that's also a B. But as you know, Alex, the boost is coming from those subsidies, right? Those government subsidies. They've been doing a lot of benefiting from a lot of those government subsidies to, get people to buy new appliances. The aggressive price cuts, those deep discounts, promotions, and that stimulus is just helping, deal with what's been muted demand in China, right, for appliances, etc. They have expanded into some new areas like meal delivery, so they're trying to get beyond just that e-commerce marketplace model. Now, at the same time, they did see net income fall significantly, but it's a smaller drop than what was feared. So maybe that's part of it, why we're not seeing such a heavy hit. It's better than feared, right? So if it's better than feared, we're not going to see it get hit as hard. But to your point, operating margin did fall. It shrank to 1.7%, so that's below 2%. Again, they've got some heavy discounting at play, so that hits margin. The big challenge is how long can they keep up, just beating numbers, because you start having, from what I've seen in terms of analyst commentary, is that year-over-year comparison for quarters is going to become challenging once the discounts and government stimulus goes away.
Yeah, I guess I'm just caught up on the 46% decline in earnings, despite the fact that revenue is still growing at 22%. And then you look ahead kind of to the expectations going forward, and the picture doesn't really start to improve for the better part of a year. So I know some of it had to do with sort of disappointing food delivery stuff and all those things, wiping out some of that e-commerce. But either way, slashing profits in half is never going to be a huge exciting story to tell, even if it is slightly better than the expectations. Last one is Cisco. Now, this stock's, relatively stable, typically doesn't move a ton, proving that again today. Was lower, has rallied, and it's kind of back to a level where I think investors are probably a little bit more comfortable. This is where we spent the last let's call it month. All of July really was sort of in this range around 69.70, so back to that level. But anything in particular about Cisco's earnings that you think is worth mentioning?
No, I thought they were overall solid. I mean, the guidance was in line with expectations. Their most recent quarter was obviously a slight beat on the bottom line. Top line did beat expectation. Revenue grew. I mean, it's single digits, but it's still more than 7% year over year. So they're moving in the right direction. They're obviously selling themselves as the backbone of what we're seeing in terms of the needs for AI. They've got this surge of orders from big tech and beyond big tech. They said it's not just about big tech, and they did more than double what they expected in terms of AI orders. That totaled $2 billion. So that's strong. And they've rolled out those new high-speed switches, routers, etc. We know it because when we look at our computers, we see
Dang things, man, went to 720.
So they're part of the inner workings of things. And, you know, it's not just about the big companies. They've also got sovereign AI plays here. So, you know, from companies to doing government infrastructure, they've got solid footing. To me, even though this stock is being dinged slightly today, it seems to be overall steady as she goes year to date, because year to date, you look at that performance, it's still up. Even with today's pressure, almost 17% year over year, more than 50%.
Yeah, and I look at the numbers sort of, you know, through the internals, the different segments that they have and how they break it out. There's really not anything that's dragging this company down. It's just not NVIDIA. It's not Meta. It's not growing at, you know, 20, 30, 40, 50% like some of those other big tech peers. It's a little bit more stable. It's a little bit more legacy tech. And it's trying to transition somewhat successfully, as you talked about with its AI revenue, but it's just going to have a different level of expectation than some of those other names that we talk about in this space. All things considered, though, a really nice year so far, not changing that at all with this reaction. Diane, I appreciate it as always. A good breakdown of four of the names. All moving lower here in response to earnings, but for the most part, decent numbers across the board. We're going to take a short quick break here. When we get back, it's time for Chartmaster Rick Ducat's going to help us. We're going to look at applied materials as well as the block symbol XYZ, some charts, some example trades. You won't want to miss it. We'll be right back.
Ah, circle.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. Alex Coffey alongside the lead market technician for the Schwab Network, Rick Ducat, here for the Chart Master segment. Looking at applied materials here ahead of earnings. It's going to be one of the bigger names that we hear from throughout the rest of this week. Kind of a sideways looking chart though. What do you make of it?
A bigger name and kind of an interesting take on this sector. This is more of the picks and shovels type company for the semiconductor industry. They make the equipment for this. So an interesting potential bellwether for the sector here. Nevertheless, if we were to look at the price action more, we can see that the shorter term downtrend that began here around 200 has been broken here. Price has pushed above that trend line. If you were to backtrack, you would see that this was an important area back here, a frequent stopping point for price. Also a high back from that early January period there. So now we have failed at that area once again, but we are treated back to an old support area. If you look at our green line here, 175, old lows, stopping points once again, high point, etc. Then low point. It also coincides with the purple 252-day exponential moving average that we see here. So an extra emphasis on this level as potential support. Notice as well that RSI has also broken through its own downtrend there, and we are heading into earnings. It's quite common for momentum to slow down, but things do seem to have picked up somewhat modestly as we approach this this quarterly report.
Yeah, what I was going to say is if you would have asked you a couple days ago to chart this name, the story might have been, hey, who knows? It's kind of middle ground, but it does look like the bulls on the technical front maybe took control here just a little bit, but we know earnings can change that. Let's go to your next chart. I know you like to look at volume as well and how that fits into the different story, and it's kind of the same story, but I guess it just kind of highlights some of these important levels a little bit more clearly.
The volume profile can help show kind of an extra layer over the chart here. And the conventional volume at the bottom of the screen tells you when trading happens. This shows you more where it happened here. And some of the levels that we discussed earlier come back into prominence here. 175, you can see, lines up with this large node. It's basically tied almost for the point of control. The point of control being up here near 185 as the heaviest trading area. So based on volume profile, we can see 175 to 170, and the area around 185 really stand out here. To the upside, there's kind of a little blip around 200, that same level there, but it is still noteworthy. Nonetheless, it is standing out somewhat there. We can also see that when we look at our standard deviation channels, we take our blue linear regression line, our line of best fit based on our closing prices, then we go 1 and 2 standard deviations to the upside. This gives us some potential boundaries as well. So the +2 channel right around that 200 level once again here. So some additional weight once again for that as potential resistance.
Yeah, there's so many things that make this so much more nuanced. We talked about it seeming sideways, maybe the bulls starting to take control, and you certainly see that in this kind of last half of this chart. But when you put that linear regression on, when you put the standard deviation channels, you can make the argument it's starting to get maybe a little bit overbought based off the last year as well. So just depends on how you look at things and what you're looking at. The story can oftentimes change. Looking at a quick example though, with this one slated to report earnings, looking at a bullish strategy and a test of that perhaps 200 or that 2 standard deviation range around that 200 mark. I'm looking at a 200 call calendar, selling tomorrow's expiration, buying next Friday, 75-cent debit. It's a max loss of 75. Mountaintop like peak, and often this is actually a strategy that it makes a lot of sense, perhaps if you're a technical trader, to look at some of those key levels where the volume is. That could be an area where the stock gets to and then runs into either support or resistance. That's kind of what you want to happen with this strategy, is it peaks out at a particular level, Rick. So when you see that happen, if it lines up with a level on your chart or any chart, either direction, it can make a lot of sense if you're a technical trader to try to do that. So 75 bucks in risk, very customizable trade, but this one looks for a rally to 200 post earnings. All right, let's talk Block, formerly Square, formerly SQ, now XYZ. I had to rethink things because this used to be kind of my generic symbol. Like, hey, we're talking about a stock, XYZ. Well, XYZ is a real stock now, Block, but the stock itself in performance terms, this chart looks a lot like the one we just looked at.
a most inconsiderate stock ticker, I agree. But, you know, to kind of look at the chart more seriously, though, we can see that, so we had our lows here, 44.27. That actually came kind of a bit after that tariff news shock that we saw. So we held on for the most part around that level, but did make some significant lower levels that we reached here. But from there, we kind of stabilized. Now, for the most part, you could draw an upward sloping channel connecting these lows here, mostly seeing that our 21-day exponential moving average in yellow there has been supportive, most recently in today's session here for now. It lines up with our trend line here, so that a break below that 75 level could be noteworthy for this particular stock. That would also then open the door to this area, 69.70, around that point. We have our green line. If we were to go all the way back here, you could see that with some high points here, a subsequent low point after the breakout, another breakdown point here, and resistance once more. So this could be a key level that could come into focus if we do see some disappointing activity in terms of holding on to that level.
I know you got some more stuff here, but throwing you a curveball. I'm looking at this stock, okay, right? It has this huge, almost like dome. It breaks down, right? Kind of can make the argument that we're breaking out of something similar to the downside. Looking at how this one is traded before, I know that's almost like a sine wave, but I would have to think that all else equal, relatively bullish.
Yeah, I think that there's still some work to do for sure. What you said is makes sense here, because we have kind of passed out of the extreme highs and lows here. Now we're kind of back in the middle here. Notice that we did, however, not take out this repeated support area. It was also the gap point that we hit here. That's where we got stuck twice more. So that 82 level really stands out as a potential turning point to really kind of fulfill what you're saying.
And I think this is where that volume profile is going to come into play, because I got a hunch maybe we're going to have a chunk of volume up here at these levels that we're going to have to work through.
So interestingly enough, you know, the extreme price points, that's where volume has the least time to develop. It would be quite unusual. For example, this is actually a decent example right here. Very little time spent, but fairly heavy volume in this area. Here, the area of interest would be more around 90, kind of the general kind of center area for this area. So mostly what you said, yes. Yeah, so mostly what you said, yes, that's an important area here. But really the standout is just a bit above where we are now. The point of control, the heavy trading area, 79.
Point of control.
With our +1 standard deviation channel there. So this is another way we can see the extra layer. You might not have realized how much heavy activity took place right about where we are now, but it shows that could be a further tipping point, perhaps.
Yeah, and that's interesting too, because it looks like a relatively extreme point, but it can make sense if you think about it. It looks like this was a big candle right in this area, probably around an earnings event or something. So a lot of activity on one particular session can certainly skew some of this, but also it was a support point then several times, and it makes sense, right? If you're a bull waiting for that pullback, it gets to your level.
So I got 50, 64, 65, 19 to break
transactions. You can see it held that level several times. So
on SPX.
Yeah, that's kind of what a lot of people look for, is these areas where the technical signs kind of align together, because
they're at 870.
Because there's more different sets of eyes looking at the same areas for these various reasons here. But a quick glance too at our longer term chart, we can see that when we do look at the volume profile, it is very much geared toward the bottom of this chart here. So another thing to consider.
Another 9.
That's often viewed as a sign of a significant low point. Certainly not a guarantee that we won't move below it. We just moved below it fairly recently here. So a key level to watch.
30, 930.
Yeah, and I think this is one of those situations, hey, maybe at some point all this price action becomes relevant again, but like if I'm looking at this chart, I'm starting it right here. Like it just like, hey, so much of this was an anomaly. Maybe again becomes relevant at some point, but you're just going to get so much more information looking at how this stock's consolidated. And yeah, it's been disappointing, but you could make the argument it's made this wide base from like 40 to like 100, 120. It's taken a while, but it's not really going down as much anymore. It's more sideways, even on that longer term. Rick, appreciate it as always. Let's look at a quick example trade. No earnings for this one. We already got them, but neutral to bullish as things are starting to perhaps improve.
Woo! Big bounce.
Put vertical in this name. The expiration is the end of the month, August 29th, looking at the 73.71. So trying to keep this relatively tight. It's a relatively short-term trade, neutral to bullish. and it's a stock that's just burned investors for so many years now. Every time it seems like it's starting to get its legs, it just hasn't. Neutral to bullish, elongated Z risk profile here. If you're able to get this 50-cent credit on this $2 wide spread, rather, creates a 3-to-1 risk reward. So you'll risk here 150, chance to make 50, break even 72.5. So a little bit of cushion, not a lot, but certainly a little bit. Going out to the end of the month, if it stays above 73, chance to make $50. Rick Ducat, always appreciate it. Lead market technician for the Schwab Network. We're going to take a short break. When we get back, it's FOMO, and we're going to look at the whole sector that's been driving so much of this FOMO.
10:50 now.
Big techs on the minds of so many. We'll ultimately look at AMD as the stock's been making this resurgent FOMO-like move recently. Stick around, you won't want to miss it.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
In the biz.
See something from Schwab?
Uh-oh. Yeah, Schwab lets you invest in
That pennant flag held on the third touch.
Specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Call.
Schwab, a modern approach to wealth management.
Accelerate your market knowledge.
We're about to resistance on the SPX.
Real-time example trades, a full hour of trading.
Be a quad top.
I'm Kevin Hicks. Catch me on Fast Market. Weekdays.
If you can count to 4, you can make a little more. If you can count to 3, you can trade with me.
Go at 12 p.m. Eastern on the Schwab Network.
I'll be right back.
Welcome back to Next Gen Investing. It's now time for FOMO. We're going to zone in on the mega cap tech space as well as some of the semiconductors in this AI trade. Joining me now from Creative Strategies, Senior Analyst Austin Lyons is here. Austin, good to talk to you again, man. Let's talk mega cap tech, Mag 7. This has been driving the market to the upside broadly for the better part of the last couple of years. It doesn't seem like it's slowing down, outperforming again today. What do you make of this kind of cohort of stocks?
Yeah, I mean, the Mag 7's really been driving it the last couple of years. Things are still looking good. AI is still taking off. ChatGPT is seeing 700 million users a week. And so the trade is still there. But there is some bifurcation. You know, I think we are starting to see some continue to pull ahead and maybe some struggle a little bit more. There's questions around Apple, there's questions around Tesla. So the trade's still there, but I think investors are starting to really zoom in with questions of looking ahead to the rest of 2025 and 2026.
I think that's a really good point, but the same kind of questions seemed like they were there, 10 months ago, a year ago for Microsoft. And then its resurgent move as it led the market back post the tariff sell-off. And then it's like we're watching that happen in real time now in Apple. We're watching that happen in Tesla as these stocks try to play catch-up. Now, I know they're both a little bit lower today, but is this becoming a situation from your perspective where it's like, hey, maybe there's some doubt, but like they've earned the credibility over the years that investors just keep trusting them?
Definitely. The counter argument is there anywhere else that's better to put your money during the AI trade? I think with Microsoft, for example,
Oh, yeah,
40%
kid, you
of
know
Microsoft's
everything.
business is productivity apps. 40% is cloud. Early on, we saw Azure do well with cloud as OpenAI was doing those big training runs. There became questions of, is that sustainable? But now Microsoft is showing that everyone's moving from training into inference. Azure keeps growing, keeps doing well. Demand is still high for their GPUs, even in this inference era. So it's more than just training.
I doubt if this kid knows what a two-headed snake is. And we might have broke resistance on the two-headed snake. Nope, it's straight across. I'm not there yet. We're close. I'm using the wicks. So I'm going to go to my heat map. They've got it going straight across too, right about the same spot. Almost identical. 637.39. Yep. I got 73, so I'd almost got a two-headed snake. Head and shoulders, resistance. Well, they're getting them young on there.
They're not necessarily the pioneer. They let someone else kind of determine the new thing, and then they just do it a little bit better. Does this new strategy of kind of maybe wheeling back a little bit and maybe attaching themselves to one or another LLM that's sort of at market already, while they kind of assess the land and wait for the best way to go next? Do you think that makes sense?
Yeah, you really nailed it there, Alex.
You really nailed it there, Alex.
Is they're saying, I mean, if you zoom out and just look at their core business, they sell personal computing devices, smartphones, tablets, Macs, AirPods, and so on. They're stepping back and saying, okay, that is our core business. That doesn't have the greatest margins. They traditionally make even better margins on their 30% of revenue from services and apps. And
you still have your braces on?
AI fit in there. It's about going back to the basics and saying, how can we continue to fit AI into that core business narrative? So you've seen headlines recently where they're exploring a tabletop robot, a smart speaker with a display. And also there's questions about are they going to get into smart glasses? And this all fits very well into Apple's current business, which is sell these personal computing devices, use AI to make them even better, give us the Siri that we've always wanted. And it's okay if you partner with OpenAI or with Anthropic to make that happen. It doesn't necessarily make sense to invest tens of billions of dollars to make that LLM themselves when they can partner with other people and focus on what they do best, which is that hardware, that user experience. And you would want to have your own sort of Siri agent to go with you across all of these devices. That's where Apple can differentiate.
Yeah, and I think Alphabet in the same way, when they're looking at their investment, kind of pulled back simply because it's like, hey, we're investing a lot, but we're losing. And if we're losing, it doesn't make sense. We might as well try to find the winner, get some sort of licensing deal for now, and assess the land as well. But let's talk semis, because NVIDIA obviously gets all the run, it gets all the conversation, and for good reason. But this is such a bifurcated segment of the market. Like, the fact that Intel, in the position that it was in 10 years ago, kind of dropped the ball through this is almost inexcusable, I think. But AMD, in the same way, is like just now again starting to become one of these names that we're talking about as a potential winner. So what do you make of kind of the second and third layer names, AMD, Intel, Micron, for example?
Sure. So let's pick apart Intel and AMD. So Intel, historically, they're an integrated device manufacturer, which means they fab their own chips and they design their own chips. This worked really well for a long time because they have very strong fab R&D, and so they could actually run ahead of their competitors and have the next process node, which gave their product team an advantage. So their foundry would run ahead with R&D, and then their product team could make better chips because they'd have smaller transistors, more transistors. That kind of got hung up for a while, and they started to lose that benefit. And then on top of it, Intel missed mobile, and they've missed AI. So right now, they're just trying to get back to their roots and say, we got to be good at CPUs, server CPUs, client CPUs, and they're trying to get foundry off the ground. AMD, in the meantime, has totally caught up from nearly 0% market share in server CPUs all the way to roughly even with Intel, depending on which numbers you look at. And they're catching up in client CPUs as well. And AMD's been able to raise prices and really drive some strong revenue from their CPU business. And they're trying to do the same with their GPU business. They weren't first, obviously NVIDIA's out there, but they're trying to ramp up from near zero market share and take a slice of that blooming, blossoming AI pie. And so, AMD is doing well. It's just how fast can they run, how fast can they execute, and how much capacity can they get from TSMC to make GPUs and make CPUs. And then lastly, you mentioned Micron. Micron is a memory maker. There's really three big memory makers. There's Micron, SK Hynix, and Samsung. Micron's the only one that's a Western-based company. Mm-hmm. And they're trying to catch up right now with HBM.
Man, I wish I'd have took that trade.
In the AI space, but Micron is doing well, and they're well positioned in the future, both with their HBM, but also with storage and their RAM. And if investors out there are new to AI and memory is a core part of winning in AI. And so Micron is trying to position their entire portfolio to help across the stack for AI.
Yeah, and it's so funny you talked about how much AMD has closed the gap on Intel. 10 years ago when I was getting started, it was like a David Goliath story. It was almost like, hey, Intel lets AMD do a little bit just so it's not a monopoly, and how quickly things can change if you get complacent or you make a couple missteps. So impressive stuff that's actually a comparable market share at this point. But also, we got to leave it there. Appreciate it as always. Austin Lyons, Senior Analyst, Creative Strategies. Looking at a quick example here for AMD, you can hear the optimism from Austin. The FOMO trade has certainly been higher of late. Looking for that to continue. Looking at buying a call vertical in AMD, the 177.5, 185 call vertical expiring on August 29th. If you did this trade, it's a $7.5 wide call vertical. Say you spent $3.50 like we did for our example here, you would have $350 in max loss potential, but a chance to make $400. So a slight positive asymmetry in that risk reward. Break even would be 181 to the upside. So you need a little bit of help in the market, but not a lot, as we're basically trading 181 here in real time. That's going to do it for this segment. When we get back, we're going to talk some digital assets and how the regulatory landscape continues to evolve and what that might mean for crypto going forward right after this.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth,
here's the knife,
income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Well, if I'd held them 6470s earlier today, I'd be rich.
Live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
I'm Nicole Cavalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Welcome back. It's now my pleasure to welcome in our next guest. That's Kyle Chaussee, the chairman of MV Global and the founder of the Paid Network, to discuss the ramifications of this recent executive order out of the president, basically paving the way, from my understanding, Kyle, of allowing crypto and a few other assets potentially to find their way into retirement portfolios. What do you make of sort of that announcement and kind of what the fallout might be?
Thanks, Alex, for having me. It was a big one. It was a really big one. 37% of the S&P or the stocks sit in retirement accounts. So even if a fraction of that finds its way into our precious Bitcoin and Ethereum, we could see hundreds of billions of dollars come into the market over the next couple of years. And I think a lot of that even sooner than later.
And so there's also kind of the fallout too, I would say, where some of these assets maybe were not necessarily restricted, but in some ways tougher for the everyday person to get access to, particularly if most of their investable capital was in retirement accounts. So there's sort of that democratization of finance. That's the fallout here, which I know is one of the things that those who are really proponents of digital assets from the beginning really kind of like this idea of this decentralization of finance. And when you look at sort of the perhaps legitimization of the space in recent months with all of the different regulations coming down, this democratization of finance, combined with this whole new potential investor base of capital that could find their way into these assets, it feels like this could be that next leg up kind of catalyst.
Definitely could be a huge catalyst. I mean, it inevitably will be a big catalyst because the demand is there. The reason that they're bringing these products to the market is because people want them. And like you rightfully said, it has been harder to access for a lot of people. For people who are new to the space, self-sovereignty or buying crypto is a complicated task. I mean, I'll give you a personal story. In 2015, I was able to convince my mother to convert her Roth IRA retirement account into Bitcoin. And since that time, it's performed about 30,000% compared to what her retirement account would have performed, maybe 300% or something. So, this is a huge opportunity for people who, and the demand is there.
as you look at sort of the additional kind of things within this space and kind of where things are going, there's been lots of conversation around stable coins and the disruption of perhaps traditional financial networks. And I'm wondering your thoughts on that, as it doesn't necessarily have to be Bitcoin, doesn't have to be Ethereum and these as assets that we invest in, but just really what the technology can do to maybe drive down margins and make, just the cost of doing business cheaper.
100%. Well, I think that you just briefly showed a clip there of Trump earlier, and he came out and said just recently that the U.S. traditional financial system is decades behind where it needs to be. And this is part of what his thing was, kind of with Doge and everything else, is getting the U.S. infrastructure modernized and up to traditional or to modern standards. And this blockchain infrastructure, which is now what a lot of traditional infrastructure companies are upgrading to, will significantly help things like clearing, settlements, cross-border payments, spreads, market trading times. We're looking at a lot of people looking at extending the time that we can trade to, from just Monday through Friday 9 to 4 or whatever, till 7 days a week. So this is a huge upgrade, blockchain infrastructure, to the traditional financial network.
Kyle, final question for you. For those who have been skeptical and, didn't follow the plan that you laid out for your family member, they've been a little bit more hesitant to get involved, and they've maybe watched friends or family or other people they know take advantage of some of these, extraordinary moves, and they feel like, oh, I missed it. What's your word to them? Have they missed it, or is it still potentially early days on what this and where this is ultimately going?
I think this is very early days, and I think for anyone who's sitting on the sidelines and maybe felt like they missed it, you don't have to go in all, and you don't have to make a decision that's black or white. You don't have to take all of your, your hard-earned cash and put it in something that's a volatile asset like Bitcoin or Ethereum right now. But if you don't put something in, you're not going to be in the game, and you're not going to understand what it's like. You're not going to be watching the price of it. You're not going to be as emotionally invested. So my suggestion, and of course not financial advice, is for someone to start that journey with whatever they're comfortable with and watch it over time. I think that Bitcoin still has a lot of room to grow over the next 20 years or so. So that's a long time horizon. And my personal opinion is that it still has another 100x left in it. I think that Bitcoin goes over the next 20 years to $10 million plus. And for anyone looking at the other alternatives, that is the best one.
Yeah, and if that happens, like you said, like how many things out there go 100x? It's uncommon, and so certainly an interesting space. Certainly one that seems to have reached that tipping point at some point and is perhaps here to stay. So we'll see where it all goes. I'm excited to see the future. Kyle Chausse, I appreciate it, and you taking the time here, the chairman of MV Global and the founder of the Paid Network. Coming up under 30. We're going to talk with George Tillis on rocket companies.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free.
Okay, here we come back down again for a double bottom. What time is it? See, it's that time of day where I got to be extra careful.
Well, Welcome back. Time for Under 30.
64.70s. Do we have time for another bounce? Or are we going to dip down to this 1, 2, 3?
Time, and it seems like recently, every time we do, the story looks a little better from a chart perspective. Really nice year-to-date performance. What do you think's driving this?
Rocket. That's what they're talking about now. It's got two possibilities. Come down and hit the 200 on a 1, 2, 3 and hold and run it back up. It has to hold that. Snake breakout, pullback, high or low. $64, $59, $65. 180 to 230. Another $50 right there. Tilray back to support. Today is Thursday. Damn, just bounced right there. What's that?
Squeeze the zone.
Squeezes on. In 1 minute, we got a triple bottom that could be, if it doesn't hold to 63. $64, $61, $71 at the low. There it is, right there. Taking 185 to 64.70s, 175. This thing's been so slow here lately. Got a hold right here. We could easily drop down to hit the 200, but we have a 1, 2, 3 symmetrical flag. Yep. I got 180 just a 1, 2, 3 trade on a symmetrical upside down pennant flag.
Look at that big support at 64, 81, 75.
Yeah, and we hit on the 2 minute. We hit the 63. I don't think it's going to do anything. Might just back out and wait. I'm going to give it another minute here, but I think this thing can drop to 64.59, hit the 200 EMA. Just like that.
Yeah, that's what I'm watching. So if we blow past that 64, 82 level, yeah. No, we're just in. Right. Unless that holds right here. This is our break point.
Okay, fly. If I were you, I'd shoot fly, or you're going to get died. You're going to die. This is the hardest time of the day for me to be trading, so I kind of slacked off here. I've noticed big time here lately is when I get my losing trades. Between the hours of 2 to 3. Right here, I just lost $80 if I sell it now. I just bought one because I know at that time of the day it's not Jimmy friendly. My eyes are killing me today.
Yeah, my head hurts. I never have a headache.
I don't either. I'm surprised being an epileptic, I don't. I have ringing in my ears constantly, but if anybody wants to know what that's like, anybody have ringing in your ears? All my life I've had ringing. This sounds like crickets. But I have epilepsy, so I might have something to do with it. Okay, let's get it.
I think it's 64, 65, 195 right then.
Yeah, I just got 90 cents. 10 of them at 90. We're back to them blue lines again that I've been eyeing all day long.
255, 195, 255. Just hit 9 on the 1 minute.
Let's see if I can get more.
Oh yeah, I'm sure you will.
If not, I'll stop out at 90.
I don't like the 64.82 spot that used to be support.
It's just that there's 120, there's 30. Yep. I was ready to sell it at 120. There it is. Bam. No, I didn't give it to, there we go. Come on. Boom. Triggered. Now, 1.35. That helped. Rob, you playing puts when I'm playing calls? Better not. Better not. Okay. I'll write your reprimand. I'll hang you on a, yeah, hang him on the closest tree. I'll fix you up with Nancy. There's 145.
Is it 130? Where's all the gates levels at? Should be close enough.
God. I tried to book a cruise here. I ain't doing that with flights. I'll stick with my resorts for now. I guarantee if I lived in a port city, I'd probably be taking a lot of cruises. There ain't no way in hell I'm gonna do this. And you can't be specific with your dates either. Man, look at that. 160. That'd been $700. Right there. If I'd have held that one. You see what I did, didn't you, folks? If you can count to 3, you can learn to trade with me. So we got a 1, 2 bis, and a 3. And I said, you know, once I got in the trade, I said, watch it. You know, we had the possibility. I think even before I got in the trade, I took this 1, 2, 3, and it failed. So I went in small because I was expecting maybe this one. 1, 2, 3. Boom. Back to the 50 SMA. Back to the 1, 2, 3 original. So I bought the dip. Once it hit that other 1, 2, 3 and added on, I only got 1 plus the 10 and sold it, and then it went to 160. So I'd have been only a $20 loss on my first one and $700 on profit on my second. Sizing's very important. I know this time of the day it's tougher for me here lately, and I can go big in the mornings and just scalp them for, you know, 50, 60 cents. Be in and out of the trade within 5 to 10, 15 minutes. Man, my eyes. Looks like I got a hair in there or something. I can't see. I found out about a month ago, my mom said you couldn't walk when you were a kid. You always scooted on your butt. And I started wearing glasses when I was 2. I couldn't see, you know. I'd run into walls and coffee tables, and I just couldn't see. I don't know how they can pair up glasses for a 2-year-old. I had a difficult childhood. I mean, 1 week old, I had my stomach operated on. I'm lucky to be here today, actually. One of them lucky ones. I've never complained, but I mean, when you're 13, Jim, you got a brain tumor. You're going to die by the time you're 20. No, Jim, you got epilepsy. You don't have a brain tumor.
Sure that the GATS 0 level is going to be 6475 on this, so keep an eye on that.
Okay, we're back down here again. We're going to get a big fat knife and play the slate.
I'm looking at tweezer bottom on the 5 on the S, so I'm thinking short right now. Might not pop much, but it's definitely tweezer bottom. But the EMA cloud ain't looking good for longs.
$180 there. I didn't take it. 180 to 210. Yeah, I'm going to let it rest and see if we get a big knife. I'll move these up to 60. If we dip more, I'll keep moving them up to where I'm just no more than 2 out of the money.
Yeah, if it knives,
Yep.
mark 60, 64, 67, yes.
Oh, really? I got
If it knives hard, that's previous day low.
Oh, yeah.
Where it bounced earlier today when it knifed hard on that 15-minute candle.
Under 70. $64, $70, $50, just in case. We hit it one. Oh no, we didn't. We hit the 200. That's 78. I know what I'm going to do. I'll be right back. Oh. I'm trying a new experiment. Putting an ice pack on my face. What's that? Yeah, it's supposed to pull out some kind of... Tom Cruise does it. Sets off some kind of something in there. Wakes you up, that's for sure. Where am I? Yeah, there I am. 240. That'd have been a good trade. 180 to 240. Off the 200. I mean, the setup was there. Back to the 63, in and out of the trade. More 1, 2, 3. On the 2 minute, we did off the 200 also. Back to the triple top. I mean, triple bottom.
I keep pushing the wrong button.
Be right back. Yeah. Goes more. Dadgum, man, it's 4:30 now. Pretty good setup on the 2-minute. Especially that retest. Same as the 5-minute. Well, yeah. The 200 EMA. I just love that 200 EMA. I'm glad I added to it this last year. Okay, that's the SPY. The SPX is getting down here again. We got 3 black crows, but let's see where this extends to the left. Yeah, it doesn't hit nothing. That does, though. That's a head and shoulders. That's right shoulder line, left shoulder line, big head, right shoulder line, right shoulder line. With a confirmation of the neckline on a 2-headed snake. You couldn't get a better triple bottom. Oh? Say what? Rob. We're at the 63 right now, Rob. That's like a pivot point. Check my phone. She might be messaging me. They left a message with me, said call for service. $105 to $160. Off to 63. Might have to go. I'll go check. I gotta leave. I tell you what, air conditioners, after so many years, get old. And now she says wait. I know it's 92 degrees here outside. You see where that head and shoulders right there? You got your left shoulder. That's why I drew that across, just to see if that resistance would bounce up from there. That's where it stopped at. So this still can come down here and hit this triple bottom for probably a better, what time is it? It's 2:04, 3:04. Tight low scalp range today. I mean later in the afternoon. Back to 105. Back to the 63. A little bit too late on that one. Boom! 105 to 180. 2 minutes. 2.5 minutes. To a 1, 2, 3. Damn. That's 100%er right there. In the 70s, in the 65s. It's not like your usual power hour. Yes, very quiet. We got a double top coming up right now. I'm in shock because I've missed 3 opportunities here, maybe 4. I just didn't take this one. I took that one, but this one, that one, and that one. Now we're squeezing in another flag. Rob gets an A+. Yeah, and look at her. /ES did the triple bottom. I don't think I even noticed that. Yeah, I did. 1 2 bits and a freebie. We're at the orb on Tesla. The circle dropped more. Now it's down to 140. Kathy Wood. Zuh. So it says Woods here. Is it Wood or Woods? Kathy Wood is known for her stock picks over the last decade, handicapping many of the growth stocks and find their way into the company's ETF. Kathy Wood. Zuh. Yeah. There's a Head and Shoulders right there too. Straight across. Dang. $64, $68. Boom. Good job, Rob. It is now 25 after. Key voices of Trump's mega movement are divided on the marijuana as president considers rescheduling proposal.
Nancy plays a game, everyone loses but her. Nancy doesn't care. Nancy only wants more. Oh, Nancy, she doesn't even see you. Jim's gonna shit on your face. Retail traders gonna shit on your face too, just for being you. Little people scream, but she can't hear in her tower. So high, it's all a blur. The pain below. Does she even know the damage done, or does she sleep so sound? Never a frown. Jim's gonna shit on your face. Retail traders gonna shit on your face too, just for being you. Jim's gonna shit on your face.
Just for
Retail traders gonna shit on your face too, just for being you.
Just for being you.
Just for being you.
Just for being you. I'll sign that contract. Clubhouse Records. Now, if we stay above the triple top breakout here, get one little fat candle, we'll be sitting on the 63 and the 50 for the end of the day close. It's now 1/2 hour left. Not a bad rebound for the bad PPI. Yesterday's lows, boom. Quite impressed how this chart looks today. Oh, shit, I took my eye off the ball. Dadgummit. There it was, too. Huh. Okay, here we go again. Now I feel like I've waited too long. Little inverted hammer on the 50 at 155. Not in it yet. Yep, there it goes. 150 to 155 to 190 right there. I'm pretty sure I could have got that. Bam. There it is. 260. $100 one. 2 candles, $100. And it's perfect. I mean, here we go. 63, the 63, and the 63 on that wick. And that body held the 50. So that'd have been $130 right there. Contract on them 2 candles. A little over 2 minutes. Yeah. Blatch. Three white soldiers. We got 20 more minutes left. Rob, make it back. You see my A plus, Rob? Okay, here we go again. Prepare ye. That was a fast bounce back up. This will be the fourth time down to the 63, if it does. Now it's starting to squeeze either way. Flagpole assessment. Is Funky still here? No. Did everybody have a good day today? Back up there. $2 to 270. $340. Intel's up today 6%. Netflix back up there again. That snuck up on me. Huh. I was real close. Well, I wasn't close enough, but I was close to the support level. $390. There it is, double top. New high. Almost. SPX. Right out of this is called a pennant flag. And very bullish. This one is. They know it's getting late in the game. They're starting to hustle it now. So I got the ES over here just so I could use the VWAP on the ES. It doesn't show up on the SPX. Okay, here we go again. The 270s. 215. Get ready. We're 9 minutes into the game. This is the 10-minute. Right at 10 minutes, it gets volatile, as Funk would say. 1.95. There's 240. I'm going to push the market sell here. 260. 195 to 260. There's 295. $310. Double top. A plus. Right off the top of this here, there's your triangle, right? And it pulled back to support. Hit the 21, so I let it kind of play around here. Then once it got above that candle there, I just went ahead and got in it. Once it stayed above it. I'm not sure that's the right way, but there's 290. And it was 9 minutes till. I mean, that takes a lot of guts. So, Levi, Jacob's third son by Leah. Genesis 29 to 34, chapter 29, 34. Liberty, physical, mental, and spiritual freedom. Liberty brings responsibility. Oh, here. Liberal, noble, free, willing, single-minded, sincerity, and slut. I mean, oh, I misread that. There's a new definition in the Bible for liberals. Maybe they weren't talking about liberals. Maybe a liberal amount. Noble, that's not today's liberal. Free, that's not today's liberal. Willing, now that could be slutty. Single-minded, nah. Sincerity, I don't think so. They're sincere, all right. I was one. I know exactly how to define them. It sure wouldn't be that. Meek is humble, having a gentle and disciplined spirit. Meek goes, not mean weak. Meek does, meek does not mean weak. It means meek. Mortal, human, subject to death. God. Okay, here's your knife. Right off the 21. How many minutes? 3? Nah. I have to cross the line. SPX boom. How many did I get? 5. Kept it under $1,000. Yeah. Sometimes, you know, I get a little quiet. Like this afternoon, I wasn't feeling too par. I kept feeling like I had something crawling on my face. I've learned not to trade if you don't feel on top of things. And I've learned not to trade during that. Today would have been a great day to trade. During that 3 to 4 o'clock. 2 to 3 Eastern time. Usually I get stuck. And I've kind of got, I don't want to get stuck again attitude. And then the damn thing, I missed 3 great trades. Waiting for a big knife so I could catch it and go long, and it never did happen. So, don't go always as planned. I had to redo this chart 3 times today. Straight uphill climb once we found the dip. I was very patient with the dip too. I think I did real good today. Except till the end. Only 10 seconds left. Wow, you're right on. Funk bug. You nailed that time. We pulled right back to the previous high too. And these 64.70s became 20 cents, almost worthless, in a matter of 3 minutes. Well, today was a song of laughter, music, winning. Randy, you need to get some sleep tonight. Look at Rob. Good job, Rob. Rob's real good. Rob's really impressing me. I mean, something happened. Something clicked in his brain. I don't think he's scared. one thing. And that's hard to do, you know. It's a game of psychology, mind over matter. I think it has everything to do with philosophy and the mind. It don't matter if it's a good day or a bad day, you can still make money on it. So I'm going to get on out of here. Cook a hamburger. So, yabba dabba do. We got some good team players in here. Richard, I really appreciate you. Magnificent. Livid Goose, new member to our family that's really brought some brightness to the room. Johnny Ringo posted something today. Edge, Bug, O, M, Angel. Did I miss anybody? Jesse. Thanks for sticking with it all day long. So I'm going to get on out of here. Bye-bye. Again, thanks all. We'll see you later, YouTubers. Hit that like button. If you haven't, make sure you hit it. We'll catch you later.